awareness of the markets that we serve. India is over 30% of our total traffic, so it is a huge market that we're missing at the moment. But I do think that once recovery comes, the recovery will be extremely rapid. And our challenge is to remain ready for that. And really, if we can have these conversations with overseas governments and arrive at a series of bilateral agreements where we put measures in place, perhaps we need to certify vaccinations and really go further to persuade people that we are a safe point of origin and destination, and we should be given the recognition for that, and to restart those vital air routes to get the global economy and everyone in the world, 4 billion people that have been under lockdown over the last year, travelling again.
Paul, we've got a couple of key subjects to get through, but let me just finish off with on this reopening narrative. How progressed are you with the technology for a vaccine passport, first of all?
Very progressed. We are undertaking a trial with a number of airlines and airports around the world, which is being facilitated by IATA with their Travel Pass product. We just need to make sure that all of the controlling authorities are also participating in that scheme, and we're very optimistic that that is going to be the route out of the current pandemic and allow people to travel safely. We just need to make sure...
Yeah, I think Michael O'Leary said if he was waiting for governments to agree a vaccine passport, we could be here for 3 years. Paul, do you need more cash from the government? And if so, how much?
We don't, no. We've taken draconian measures to control our costs. We've had to reduce significantly our employee base. We took those measures very early last year when it was clear the pandemic was going to go on for some time. And our current traffic projections through the end of the year, even with the current restrictions on market access that we've got, still suggest that we can exist without any support or subsidy.
Would you be tempted? Michael O'Leary said to me yesterday, look, the debt markets are what he is monitoring as a cheap source of finance. Are you preparing to come to the debt markets? Have you done investigation? Are you talking to any banks about doing that?
Well, all of our finances, being a government organisation, are controlled by the Department of Finance. What they're considering, you'd have to refer to them to see what's on their agenda.
Paul, look, great to have you with us. I look forward to catching up with you tomorrow at the travel market. It was a pretty phenomenal gathering. It was quite surreal to see so many people gathered in one conference. So it's great to see Dubai open for business again. And I tried out the Premier Economy seats. They're pretty nifty. Paul, I'll see you tomorrow, sir. We'll have a conversation more about travel and where we go from here. That is the Dubai Airport CEO, Paul Griffiths, friend of the show, and loyal to take time out of his schedule to speak to us. Let me give you a snapshot of what's going on with the markets. Amory Horton is, as we say, latching up and sitting in New York. This is state of play on the equity markets. The 13F filings are in. Is it time to lighten up on tech is the question we ask ourselves. S&P 500 up 0.25%. The 13F filings talk a great deal about the rotation out of tech and maybe some nuances in regards to the banking industry. I want to show you oil. On your way to $70. The Americans are flying like never before. So this is, well, not never before, but certainly is almost back to levels that we saw pre-COVID. 80% of some of the rosters are back. There's Brent, just sub $70, up 1%, and NYMEX crude up 1% at 66.48. Amory Horton and I take you through the next edition of Daybreak Europe. This is Bloomberg. Almost back to levels that we saw pre-COVID. 80% of some of the rosters are back. There's Brent, just sub $70, up 31%, and NYMEX crude up 31% at 66.48. Amory Horton and I take you through the next edition of Daybreak Europe. This is Bloomberg.
border closures and the complexities of COVID, it became apparent that if we could provide this course in South Australia, it would benefit trainees of anaesthesia in the state.
I certainly feel like I've got some excellent skills to take away from the course, and I'm very grateful that it could be run in Adelaide.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Communicating via video is not a fad.
Good morning from our Middle East headquarters in Dubai. This is Daybreak Europe with me, Menace Cranny, and Anne-Marie Horton at New York HQ. These are the stories setting your agenda. Stocks are in positive territory, but investors keep an eye on the virus. Japan's economy stalls. This year's WEF meeting is off. The India variant. Mike Novogratz tells Bloomberg Bitcoin will be amid Musk-induced mayhem. This is Michael Burry makes his own big bet against Tesla. Prime Minister, he supports a ceasefire between Israel and Hamas. A big change in tone. 6 a.m. in London, 9 a.m. in the DIFC. Anne-Marie, good to see you. It is about the virus, and you can tell that the globe is bifurcated by this virus. Implosion in the economy of Japan, a double-dip recession. The WEF cancels its meeting in Singapore. And, of course, the UK fighting the Indian strain. This is the very manifestation, Anne-Marie, of a world divided by a virus. And the question is, where are we in the evolution or indeed the quelling of that virus? Good morning.
Good morning, Menace. I think it's what we've been saying this entire pandemic. It's as if the world takes two steps forward and one step back. And depending on where you are, you're either waking up to potentially fresh restrictions like what's going on in Singapore or what's going on with Japan, in Tokyo especially, or you're waking up potentially you can get a vaccine this week starting in the United Kingdom because they are trying to battle the variant from India. They're opening up to 35 and olders. In the United States, we have Joe Biden saying he's going to send more U.S. authorized vaccines in June around the world. So depending on where you are in the world, depends how you are fighting this pandemic. So it's very much a precarious situation.
Indeed, and if you look at here, the conversation I've just had with the head of Dubai Airports, with the man who's the chair of Emirates Airline, 30% of the business coming into Dubai is closed, is locked. India, South Africa, Singapore. And for as long as those hubs come under pressure from COVID, and so the flow into the rest of the world is stymied. But stocks this morning, Anne-Marie, I know you got kicking off with those on the board. They seem pretty much immune to this COVID variant story at the moment.
They're leaning into the positive news, and that is vaccination programs in some parts of the world, like the United States, the UK, Europe, really picking up speed. So we have Asian equities, European equity futures, U.S. equity futures really in the green this morning. If you bring up the board, we could take a look on where we trade. And then also, Manus, we have an uptick in Brent, pushing to $70 a barrel. This goes to what's happening here in the United States. You said to me this morning, your lot, Anne-Marie, they're flying. Well, that fuel demand is pushing into the oil price, also a weaker dollar. That's helping Brent this morning. And the 10-year Treasury yield, 1.64%. We have the FOMC minutes tomorrow, Manus. Richard Clarida yesterday saying, not yet time to start talking about tapering, but any hints on what the Fed thinks about inflation as given the data we saw last week, we'll see in those minutes potentially. Joining us now to discuss all of what's going on in the equity markets this morning is Paul Markham, Newton Investment Management Global Equities Portfolio Manager. Paul, very good morning to you. Let's start with the virus there is potential concerns that we see the markets pretty much shrugging off. Why do you think this is, and are they wrong?
Good morning, Anne-Marie. Well, the problem really is that the market has seen such an unprecedented amount of stimulus that it's been very difficult for investors not to participate, when in reality at the back of their minds is the fact that at some stage there's going to be a couple of things which could come back and really derail some of that strength in markets. One of them is, of course, the fact that the virus can come back in different mutations, or those geographical differences which you've described, particularly in places such as India right now and Singapore and Tokyo, Japan, etc. But also the fact that at some stage governments will have to roll back some of those stimulus packages and furlough schemes and so on which they have in place. And so those things together could weigh quite significantly on markets at some stage. The problem is right now is the timing of that is quite difficult to ascertain.
Good morning to you, Paul. Yeah, I was caught up with James Athey from Aberdeen, and his point was that we're in this euphoric state in equity markets at the moment. We're not really prepared for any downside. You say that we are at a crossroad in equity markets, particularly in regards to the cyclical trade. Talk me through whether you think we're at a peak, and what do you mean by crossroads?
Well, we're at the stage where the market has given cyclical sectors some head start as regards their price relative to what they're earning. Multiples have expanded quite significantly in those spaces. Let's not forget, of course, that we had a 12-year period where value had underperformed growth, broadly speaking, for a very long time post the financial crisis. I think we're at a crossroads now, really because the market will start to need to see some form of earnings progression to justify that valuation re-rating. It will also need to start to see some green shoots of economic recovery in order to fire that. So I think that as we sort of go through the end of this year, there may be moments when the cyclical trade starts to weaken off a little bit. We may see some reversion to some of the more growth-related areas, and it won't be a straight line. That's not to say that the value stock or cyclical stocks can't start to rally once again, but I think the market will start to want to see some evidence of progression of earnings.
Then what about the potential recovery trade you see in Europe? What are you eyeing?
Well, of course, we've seen so many false starts and much publicised issues around the EU's ability to source and roll out vaccines, and that was a difficult time for the European Union. As we come through the year now, I think that the rollout is starting to happen in a better way. I think that the economic recovery that the market will presume follows that will start to potentially drive European stocks as we go through the year. The only problem really with playing that is that you really have to be involved in some sectors which may not always be the ones which investors see as the fundamentally most beneficial in terms of the way that they're organised. So, for example, the banking sector, which is one which many investors still don't trust, is one which should benefit very significantly from that. Of course, traditional retailers don't work in the way they used to because of the advent of e-commerce. So in many ways, probably going to be the mid-caps which do better and some of the more cyclical large caps, because the European markets have tended to become domestics, which are going to have to work. So it's a little bit more difficult for the stock picker, I think.
So, Paul, the other point that this call that you have, which is that it's lagged specifically because of COVID concerns, and we see those rolling lockdowns. But you say the price to book multiples are appealing. You talk about high corporate cash levels. So is this one of the best value opportunities out there for you? Is it that patience will pay out?
It does feel as if Japan in this kind of rotation should do well. And it's rather unfortunate for the Japanese market that we've had this sort of lagged COVID wave come through over there. I mean, let's not say that it's as bad as some of the waves that we've seen in some other parts of the world, but nonetheless, after a period where it seemed that Japan had been largely spared the worst of the pandemic, it's starting to come through. Now, the sector breakdown analysis of Japan, as you know, is one which does tend to favour cyclicals. It has a high percentage of industrials, of autos, and it's got some really good companies in that space. That's a positive. But I think the key there as well is around shareholder returns, because the balance sheet cash is so high in Japan and the price to book multiples are so low that buybacks make a lot of sense. So what we'll be looking out for is to start to see companies to support their share prices by buying their stock back at below book value and bringing down some of those cash balances. Something we've been looking for a long time, but we think the moment may have come now at a time when the market may need some support.
Paul, stay with us. Do not hang up. Do not hang up the call. That's the instruction still for 2021. Paul Markham, our guest this morning from Newton Investment Management. Let's get your first word news now with Annabelle Drulis.
Thanks, Manus. President Joe Biden's told Prime Minister Benjamin Netanyahu that he'd support a ceasefire between Israel and Hamas. It's a shift in the US approach following days of rising criticism for not taking a stronger stand on violence that has so far killed at least 220 people, mostly Palestinians living in the Gaza Strip. Italy plans to phase out its curfew and restart the economy. That's as the number of COVID-19 cases is going down as the vaccination program steps up. If infections keep declining, Rome wants to remove the curfew for low-risk regions on June 21st. On Sunday, the number of deaths in Italy fell to 93. That was the first day below 100 since October. Elon Musk has lost his spot as the second richest man in the world. A drop in Tesla shares has pushed him below LVMH chair Bernard Arnault. Musk held the top spot on the Bloomberg Billionaires Index as recently as March. That's currently filled by Amazon's Jeff Bezos, worth $190 billion. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anne-Marie?
Annabelle, thanks so much. Annabelle Drulers in Hong Kong. Just ahead, it's 13F Day. We have a look at how the biggest hedge fund managers spent their cash in the first 3 months in the year. I'll give you a hint. Financials were a key sector. It's coming up next. This is Bloomberg.
Bloomberg has enhanced search on the terminal. You can simply type phrases in everyday English with the command line.
Of the deaths of children in Gaza and on the West Bank.
Analyze market.
See what it's like.
You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Well, we're going to be spending a lot more than Netflix. Right now, it's between the two of us, we're spending $20 billion a year on content, and we expect to spend more than that. Together, right now, we have almost 100 million subscribers, and neither one of us have really deployed aggressively outside the U.S., and we're differentiated in a meaningful way in the U.S. now with the extraordinary IP that John and his team have built together with Discovery. It's a very differentiated and compelling offering.
That was the Discovery's CEO, David Zaslav, on his plans for content spending in the next year. And the group, of course, Anne-Marie, signing that mega deal under many names. I know we were just chatting about it in the break there for AT&T's media assets yesterday. The story was, of course, a Bloomberg scoop. Now, 13F is that moment in the quarter that we all look for. The filings are in, and it gives us a glimpse really into the moves by major hedge funds during the first quarter of 2021. It was a hectic quarter. Reddit-fueled trading. Do you remember that, Anne-Marie, every day? The implosion of family offices at Archegos. $10 billion of losses and and counting around the market. Paul Markham is with Newton Investment Management. Paul, I could give you a roll call of what happens, but the upsum is this. Tech positions were dropped by, on average, 8%. Some major funds dropped their exposure by 13%. Did you trim any tech exposure at all in the first quarter, or are you about to?
Yes, Manus, we did take some out. We didn't take some out to the same amount that you mentioned, but we did reduce. A couple of reasons really for that. One of them, of course, being that the rising interest rate environment does tend to negatively impact those kind of long duration equities, which have broadly been dependent upon very low interest rates. But also, of course, the fact that the sectors were very heavily owned, and also, finally, the geopolitical question marks around some of the comments we had from certain US tech CEOs talking about the preponderance of Asian manufactured chips. And all of those things weighed a bit on our position, so we did take some profits. But on a longer term basis, we're still very much positive on the sector.
Staying somewhat in the tech theme, Alibaba fell out of favor with a number of hedge funds, according to these filings. Do you expect, Paul, this trend to continue when you look at Chinese tech, given the clampdown we are seeing in that space?
It is a big question mark, I think, Anne-Marie, because the big problem, I think, here is that investors find it difficult to understand what could happen next as regards the kind of government action that we've seen in China. If, for example, we looked at it a different way and said that the government wanted to raise taxes, as was potentially the case in the US, for example, as regards to tech firms, investors can kind of bring an estimate of what the new tax rate will be, and they can put that into their models, and they can adjust their valuations accordingly. The difficulty with these kind of actions is that in many ways they're sort of much more political in nature, and they're quite hard to quantify. So it may be that for a period of time that you see that some of the Chinese tech names tread water, and they may need to give investors a little bit more visibility around what's likely to come next. And it is likely to go in a circle. You see the companies all impacted one by one, and it will come around every couple of years for those names. So it may be that they do merit slightly lower multiples than they've achieved in the past.
Paul, we spent a lot of time, Anne-Marie and myself, talking to various people about the commodity super cycle. In the past quarter, it was commodities that superseded everything else. Commodities and credit were the absolute alpha in this quarter. Will that continue? And how do you play exposure to that vicariously through equity or directly through commodity exposure itself?
Well, the second part of your question, Manus, I think is reasonably easy. I think for equity-only investors such as myself, it's generally been the companies which have been the route to do that. I think for more multi-asset style strategies, I think the ability to buy physical or potentially to use ETFs, for example, is something which is quite popular as well. As regards to the kind of return of a commodity super cycle, we've always felt that that's unlikely. That was really a once-in-a-generational thing, driven by the new infrastructure spend which the Chinese government had made really from 2002 through to about 2012. And from here on in, there will still be quite strong commodity demand from infrastructure build-out in the emerging world, particularly from China, but it won't be the one-way street that it was before. So the companies have tended to rein a little bit their investment plans. They've become more focused on free cash flow yield, and we think that's quite constructive and positive. So some of the mining stocks we think are reasonably good places to be, but I think they will still have a cycle to them. We don't think it will just be a one-way street with regards to stock price nor their earnings.
Okay, so we're not in a super cycle. What does this mean for your inflation expectations then, Paul?
Well, we do think, Anne-Marie, that there's the possibility of there being a kind of two-stage story here really with inflation. One of them is that, of course, the Treasury market is likely probably to see yields continue to rise, albeit, again, not in a straight line, but we would expect to see them going to 2 or further this year on the 10-year. But really the inflation story behind that is one which is likely to be really, influenced by the recovery, heavy demand that we see. But really going into 2022, we think that a couple of things will come to play. One of them is that, of course, government sponsorship of wages and furlough schemes and so on will roll off. But also we'll start to see the reality of a new world come into play. And many consumers, for example, let's talk about tourism. People get on a plane and they think, well, I don't like sitting here with a mask on. It'll take you a long while to get through the airport. And when you get to your destination, not everything is necessarily going to be open. So all of those things together may well mean that corporate or consumer behaviour starts to change. And that could well put a little bit of a lid on inflation. You may see something a little bit lower coming into 2022. So central banks are likely to run hot for now and see what happens as we go into the end of this year and beginning of next year, I think.
Yeah, I'm bruised by COVID tests, and I'm bruised financially and time-wise. I'm lucky, and I'm one of the lucky ones that gets to travel. Paul, you talk about slightly higher rates and your inflation outlook. One thing which I was drawn to this morning, which was JP Morgan's Treasury survey, short positions the most stretched since 2017, Bank of America, duration underweights. But what really caught my eye was this survey that we've done. The pain threshold for the economy is going upwards. In other words, the asset owners don't think that the economy is going to be hit until rates hit 2.25%. What would 2.25% on 10-year government bonds do to the equity market?
Well, in the early stages of the journey from here to 25 minutes, I think firstly, we would be likely to see the underperformance probably again of some of those longer duration assets, maybe sectors such as tech. If it's a very slow grind upwards, it may not be dramatic, but it's likely to happen, and some of the more value-related areas could continue to outperform. I think as we get past and on the way to a notional 225, clearly certain things depend on what the real rate behind that is, but let's just say that it's something which is broadly similar to where we are now. It's likely to probably be quite negative for most equity assets for a period of time, because most of these companies now have a balance sheet which is really much leveraged to a world where rates are much lower and where we've become used to a much lower interest rate environment. So I think it will probably spook equity markets, but I think the pace of where we go from here to there is crucial. If it's just a slow tick up throughout the rest of this year, it's probably manageable. If it's lurches upwards, I think that's going to spell trouble for the equity markets.
Yeah, whether inflation is transitory or something more sustained, this is something that's going to hurt equity markets, of course. Paul Markham, thank you so much for your time this morning. Newton Investment Management, Global Equities Portfolio Manager. Now, just ahead on the program, Joe Biden calls Israeli Prime Minister Benjamin Netanyahu to tell him he publicly supports a ceasefire in Gaza. This amid mounting pressure on the U.S. president to shift his stance. The latest coming up next. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Valuations, particularly, sort of technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty. It's not a surprise. I don't think it's any indication of the beginning of the end, but I do think it's still
by the end of June, when we will have taken delivery of enough of such vaccines to protect everyone in the United States will share at least 20 million of those doses, that extra supply, with other countries.
U.S. President Joe Biden pledging to share at least 20 million doses of U.S. authorized COVID-19 vaccines managed with foreign nations by the end of June. It's the first time his administration will release doses abroad that could have been used domestically. So a big change in the stance in terms of the vaccines. Meanwhile, Biden also shifting the United States' approach to the conflict between Israel and Hamas in Gaza, telling Israeli Prime Minister Benjamin Netanyahu in a phone call yesterday that the U.S. now supports an immediate ceasefire.
मैंने कुछ दिन पहले अपने चैनल पर वीडियो अपलोड किया था ये बिटकॉइन कैश के हवाले से पेमेंट प्रूफ के हवाले से तो मैंने बोला था जब पेमेंट रिसीव होगा तो उसका स्क्रीनशॉट मैं अपलोड कर दूंगा तो रात ये पेमेंट मुझे रिसीव होगी थी ऊपर स्क्रीनशॉट है जिसने ये वाला नीचे वाला वीडियो नहीं देखा तो जाके देख सकता है.
It is interesting because President Biden, as you said, did tell the Israeli Prime Minister he'd support a ceasefire. That's still not strongly calling for a ceasefire, which is something other nations have been urging the US to do. But it does represent a shift in tone, and publicly so. The US, of course, has been very engaged behind the scenes in a lot of the diplomatic efforts to diffuse the situation. Loads of calls again yesterday to stakeholders, both in the Middle East, across North Africa and Europe and so on. But publicly, at least, the administration has been very careful in their remarks to date. Of course, they've been saying that Israel has the right to defend itself and that Benjamin Netanyahu's reactions do not appear to be an overreaction so far. It's still probably giving Netanyahu some wiggle room to have a few more days here to try and continue his work to degrade Hamas, to target its military commanders and so on. But it's also a signal perhaps that after that he needs to start winding down a couple more days and he needs to start looking towards a ceasefire with Hamas. So not quite there as yet.
And there is still ongoing conflict for Israel. What are they worried about? Let's say in this conflict
आज हम जिस साइड का पेमेंट निकालने वाले हैं ये साइड मैंने आपके साथ तकरीबन 3 से 4 मंथ पहले भी शेयर की थी और विड्रॉ लगाते हैं मुझे नहीं हुआ क्योंकि मैं आपको बताया हार्ट पता लेकिन थोड़ा साइड जो आपके साथ शेयर करूंगा वो ओल्ड और फ्री अर्निंग साइड है उस पर विदाउट इन्वेस्टमेंट के आप जो है विड्रॉ भी लगता है मेरे परफेक्ट में $27 की इक्वल अमाउंट पड़ी हुई है ठीक है मैं सिंपली क्या करूंगा यहाँ से $5 का विड्रॉ लगा लेता हूँ यहाँ से परफेक्ट मैंने सेलेक्ट किया उसके बाद यहाँ पे सिंपली क्लिक कर दूंगा उसके बाद मैं यहाँ से कंफर्म करूंगा कंफर्म करने के बाद यहाँ पे क्या हुआ है यूजल साइड है गोल्ड सिंपली मैं यहाँ पे अपना अकाउंट जो है लॉगिन करूंगा और अकाउंट लॉगिन करने के बाद हम इस तरह से कुछ लॉगिन हो जाते हैं इस पे करना क्या होता है आपको हर घंटे तो ये जो लोग विड्रॉ लगा रहे हैं ठीक है आज की डेट की यहाँ पे लगता है नहीं लगे हुए लेकिन 15 की डेट के लगे हुए आज तकरीबन 16 ठीक है अब यहाँ पे टाइम पीरियड का भी ऊपर नीचे हो सकता है बट पेमेंट अभी तक दे रही है ठीक है बाकी यहाँ पे मैं आपको अपना शायद विड्रॉ में जाकर दिखाता हूँ कि लास्ट वाला विड्रॉ जो हमने इससे लगाया था वो यहाँ पे हिस्ट्री शो होती है कि नहीं होती बट यहाँ पे हिस्ट्री शो नहीं हो रही बट यहाँ से मैं पेमेंट एक निकलवा चुका हूँ ठीक है सिंपली अब यहाँ पे हम क्या करने वाले हैं दूसरा पेमेंट लगाने वाले हैं तो सिंपली यहाँ पे आप मेरे अकाउंट में देख सकते हो जितनी अमाउंट है 0.002 मिलियन हम लगा सकते हैं उसके अलावा अर्निंग करने के लिए सिंपली आपको नाटर बोर्ड के ऊपर क्लिक करना होता है और क्लेम कर लेना होता है ठीक है और यहाँ पे देख सकते हो 122 तोशिश यहाँ से भी अर्निंग हो चुका है जो ऊपर ऐड भी हो चुका है उसके लगा सकते हो विड्रॉ इन्वेस्टमेंट की आप अर्निंग भी करोगे ठीक है जो नेक्स्ट साइड के बारे में हम बात करने वाले हैं तो अब पहले साइड के बारे में बात करते हैं इस पे हम पेमेंट लगाते हैं उसके बाद नेक्स्ट साइड की तरफ चलते हैं तो अकाउंट हो चुका है लॉगिन और अभी मैं सीधा जाता हूं विड्रॉ के ऊपर और मेरा परफेक्ट मनी भी ओपन है और यहां पे मेरे परफेक्ट मनी में $27 की इक्वल अमाउंट पड़ी हुई है ठीक है मैं सिंपली क्या करूंगा यहां से $5 का विड्रॉ लगा लेता हूं यहां से परफेक्ट मनी मैंने सिलेक्ट किया उसके बाद यहां पे मैंने $5 टाइप किया और नीचे रिक्वेस्ट का बटन मिल जाता है यहां पे सिंपली क्लिक कर दूंगा उसके बाद मैं यहां से कंफर्म करूंगा कंफर्म करने के बाद यहां पे हमारा जो विड्रॉ वो लग जाएगा ऑटोमेटिकली तो यहां पे देख सकते हो बैच आईडी भी शो कर दी कि हमारी पेमेंट यहां से ट्रांसफर हो चुकी है ठीक है अभी चलते हैं परफेक्ट मनी में यहाँ से सिंपली रिफ्रेश करते हैं ठीक है बाद में यहाँ से कंफर्म करूँगा कंफर्म करने के बाद यहाँ पे जो है हमारा जो विड्रॉ है वो लग जाएगा ऑटोमेटिकली तो यहाँ पे देख सकते हो बैच आईडी भी शो कर दी कि हमारी पेमेंट यहाँ से ट्रांसफर हो चुकी है ठीक है अभी चलते हैं परफेक्ट मनी में यहाँ से सिंपली रिफ्रेश करते हैं ठीक है मैंने यहाँ से रिफ्रेश किया तो यहाँ पे देख सकते हो 32 जो है USD हो चुके हैं और बाकी यहाँ पे जो नेक्स्ट साइट है अब उसी की बात करते हैं ये साइट से पेमेंट मिल चुका है अब नेक्स्ट फ्री अर्निंग साइट है ठीक है मैंने आपको इसका पहले भी पेमेंट दिया हुआ है तो ये वाली साइट है गोल्डन प्राइस इसका मैंने आपको पहले पेमेंट दिया हुआ है ठीक है आज सिंपली हम इसका नेक्स्ट पेमेंट लगाते हैं देखते हैं फ्री में जो है बिटकॉइन कैश की ये वेबसाइट है फ्री में बिटकॉइन कैश आप इस साइट से अर्न कर सकते हो विदाउट इन्वेस्टमेंट के और विदाउट इन्वेस्टमेंट के
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Good morning from New York this week. I'm Amory Horder with Mattis Cranny live from Dubai. This is Bloomberg Daybreak Europe, and here's what you need to know. Stocks are positive, but investors keep an eye on the virus. Japan's economy stalls, and this year's World Economic Forum meeting is off, and the UK battles the Indian variant. Mike Novogratz tells Bloomberg Bitcoin will be pressured for weeks amid Musk-induced mayhem. This is Michael Burry makes his own big bet against Tesla. And Joe Biden tells the Israeli Prime Minister he supports a ceasefire between Israel and Hamas, a big change in tone. Mattis, very good morning to you. The markets this morning are leaning into the good news, and that is the U.S. is sending additional 20 million doses of vaccines abroad. Also, it's the first time the U.S. recorded the lowest number of new COVID infections since the early days of the pandemic. I have the good news this morning, Mattis. What's the bad news?
Well, the counter side of that is, of course, what's happening with Japan. That's the data, the confirmation of a double-dip recession. But it's these sort of moments where everybody focuses. The WEF is cancelling their physical gathering in Singapore. And to that end, you know, you counterbalance that with Cuomo saying, look, it's time to get back to normal, the easing the mask restriction there. But undoubtedly, I've just caught up with Sheikh Ahmed, who runs Emirates, and with Paul Griffiths, who runs Dubai's airport, one of the busiest hubs in the world. 30% of their business is closed from India. We're not able to fly into the UK without a quarantine. These are the idiosyncratic things that change the face of business for us, Anne-Marie. So the world is undoubtedly bifurcated, to choose the word, not from markets, but for the world of COVID.
I know, and I know you're very eager to learn about whether or not the UAE is going to come off that amber list getting into the UK. But the UK right now, Mattis, at least from the tone, the signaling that's coming from whether it's Mr. Hancock or Boris Johnson, there is this worry about that variant from India as it spreads. And what they are trying to do is really a race against time and get as many vaccinations out there before they start to continue to ease, whether or not adding some of these countries on the green list, but also ease their own restrictions within the country.
Now, well, Sheikh Ahmed and Paul Griffiths believe that we will get some good news for the UK getting into the UK, possibly going into amber list next week, and then it's the roadmap to green. To the markets, Anne-Marie, Taiwan is the alpha of the Asian market reprieve, up by over 5%. Asian stocks are trading higher this morning. You are just seeing the S&P futures up by 31%. Those 13F filings, okay, they're retrospective. People have shaved their tech exposure. They've pivoted into some of the banks here and there, which is about curve steepness. Clarida says now is not the time to taper. So you take that along with American Airlines ramping up their rosters, and that adds into the momentum, which adds into the frenzy around Brent, nearly $70 a barrel, as, let's say, the UK, Europe, and the United States of America travel more versus the India closed down, shut down, and the angst in Asia. To the 10-year government bond yields, 1.64%. Clarida says now is not the time to taper. And the question we need to ask ourselves more broadly is whether inflation expectations turn from just a ratchet to the highest in 10 years to something more self-fulfilling. Anne-Marie, let's reset, because a year ago, the pandemic ravaged country after country. Consumers were, I suppose, panic buying everything from toilet roll to water and canned goods. Today, companies are desperately trying to stock up. Corporate hoarding is pushing the supply chains to the brink of collapse. The shortages, the price spikes, they're nearing the highest levels in modern memory. Let's get a little bit more with the story. Our chief Asia economics correspondent, Enda Curran, sets the agenda. Enda, great as always to have you with us. What is this supply crunch about? Last year it was Anne-Marie and myself hoarding for lockdown. This time it's at a global corporate scale.
Well, it really is, Manus. We've spoken to a lot of companies and manufacturers about this, and several of them are saying that supply chains are upside down because they can't meet global demand for their products. I mean, that's what's at the core of this. It's a big surge in demand now as economies try to get moving again, even though the pandemic isn't over. But this great reopening back in the US and Europe is putting big pressure on manufacturers, and as a result, they're struggling to get the kind of raw materials and the components that they need to meet this demand. And they're seeing prices surge across the board, be it for copper or iron ore, be it for semiconductors. They're dealing with this mix of price hikes, shortages of goods, and then they've had to deal with weather events. They've had to deal with the blockage of the Suez Canal at one point. So when you take it all together, the end result has been this kind of massive push now happening on supply chains. It's not just a China or an East Asia story. It's happening globally, and these manufacturers are facing soaring costs and finding it much harder to meet demand from their global customers.
Yeah, one CEO in your story, great piece, and you name it, and we have a shortage on it. So what does this mean for companies and the world economy?
Well, the big question, I think, Anne-Marie, then, that everybody's asking is, will this fuel global inflation? We're in the kind of environment now where everybody's debating are prices going to take off. The question is, will these input prices flow through and force factories to hike their prices for global customers? Now, again, manufacturers that I've spoken to out here make the point that they've seen price volatility before, but the breadth of increases in their input prices this time around is something that they haven't experienced from commodities through to the full gambit of input components that they need, and that they in turn are talking to their customers about.
Okay, we seem to have just had a momentary glitch there and that big story, Anne-Marie, of course, is all about, it comes back to the very core of the conversation you and I have every day, which is about whether this spike in inflation is transitory or coming for a longer stay, isn't it?
Yeah, certainly. And it doesn't matter what it is across the commodity sector, Mattis. Lumber, corn, oil, coffee, it has all been up on a tear. From the depths of the pandemic, we're up, what, some 80% on the Bloomberg Commodity Index? And is this a pause, potentially? Are we going to stay at these levels? That acceleration going to continue? And then what does it mean for inflation? To your point, does that mean it's transitory or something we need to worry about for longer? All right, we want to get a recap, though, what else is going on in the world. Our first word news this morning with Annabelle Drillers. Hey, Annabelle.
Thanks, Anne-Marie. President Biden says the US will share at least 20 million doses of authorized COVID-19 vaccines with foreign nations by the end of June. It'll be the first time the White House will release doses abroad that could have been used domestically. It's on top of 60 million doses of the AstraZeneca vaccine that hasn't been approved for the US use. After devastating India's biggest cities, coronavirus is now hitting rural parts of the country. And many of the villages have no way to fight the virus. Some have no healthcare facilities, no doctors, and no oxygen. Some rural citizens say they feel like they've been left by the government to fight the pandemic alone. Many believe the scale of the crisis is much bigger than the official numbers suggest. Half a dozen senior bankers at Credit Suisse have left the firm in recent weeks. They're the latest in a raft of defections following the implosion of Archegos Capital Management. The Swiss bank was the biggest loser from the collapse of the firm, writing down $4.7 billion. It's slashed the money set aside for bonuses to limit the financial hit. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Manus?
Annabelle, thank you very much. Annabelle Drillers in Hong Kong. As many countries begin reopening and returning to international travel is more of a possibility than ever. But from PCR tests to vaccine passports, flying is likely to look very different than it did just a year and a half ago. I spoke with the Emirates chairman, Sheikh Ahmed bin Zayed Al Maktoum, to get his thoughts on the coming summer season.
The timeline always is left also to an external government. You know, I mean, they are the one who are really slow. To us, we'll be always there in no time to serve the market as we used to. You know, we have more than 150 aircraft on our 777 are all in service. We have some of our A380s also en route. We're trying to push more and more, but we want also to government that they will open with all the new protocol. And
getting back to pre-COVID demand levels, Michael O'Leary was with me this morning. He said, we're going to need a vaccine passport, and that's going to take over from the PCR. Do you see that happening, vaccine passports trumping the PCR?
You know, I think we are lucky if we talk about the UAE. At least we did vaccinate 12 million doses has been given, really, and that nearly more than our population. I would say 105%. That's very positive. And I think sending that message. Of course, we need some kind of protocol, whatever you will call it, a passport, whatever name it's given, that will make people happy to see it is less work that they have to do.
So you support vaccine passports or protocols?
Yes, I mean, whatever it's called, you know, I mean, should be a procedure easy between government that you can enter any country or leave that country.
The UK is probably one of your most important routes, and yet we were not included on the green list. Why was that?
You know, I think there was a bit of people who really pushed a lot because we were open, a lot of citizens and people who came during the New Year and enjoyed it here. And as you see here in Dubai, the restriction is there, keeping our distance, you know, if forcing it, everybody is wearing their mask, you know, doing what necessarily do. And also on the airline side, if you will see that we took every measure to ensure the safety of our passenger and also our staff on board and also on the ground when they touch on the points here in
Is the UK being transparent enough on how you move from red to amber to green?
I don't think so. You know, it's very difficult to understand what. If you see our number is really dropping down, the number in the UK has really dropped down. So I think we need to look at in a very thorough way to see what exactly happening. And I think we proved to the world also that the UAE today isn't the top 3 in terms of vaccine.
But has the UK told you what you need to deliver to them?
Of course. I mean, our official been in touch with the UK government. They always demonstrated and they showed every number that we have.
That was the Emirates chairman, Sheikh Ahmed bin Zayed Al Maktoum. We caught up yesterday at the International Travel Show, Amri. Yes, it was a real event in a real big auditorium with real people, but on a slightly more important point, the UK lacks transparency. You saw it. And I think the other thing is, I caught up with Paul Griffiths, who runs Dubai Airports here, and Paul is very, very candid. Sheikh Ahmed is hopeful that we'll get news next week that we can maybe get off the red list, but there's a lack of transparency. And the issue is this. Paul Griffiths this morning said he thinks that we'll go off red onto amber, and that's the pathway, the trajectory, as it were, to green. So it's going to be a long road before you and I are physically in the one studio at the one time in the one city simultaneously.
I'm desperately looking forward to it, Manis, but I do think that the UK is signaling a much more cautious tone, given the fact that they are fighting this variant from India. Potentially this wasn't the case maybe a month ago, but now they are signaling that they are going to be a bit more cautious. So I think it's more with the CEO of the Dubai airports that it's going to be a bit of slower. You're going to go from red to amber, not shoot from red to green. Quickly, Manis, though, you also learned something about Emirates' new chairs. I saw this video you posting all over Twitter. What did you learn?
Yeah, it's called Premier Economy. Some people don't know what happens when you turn right on a plane. Some people know only what happens when you turn left and go upstairs. That's you. I'm one of the people, I turn right. I head to economy. Yeah, I do. I go economy. Premier Economy, amazing seats, amazing product. I think it's going to be hard for Virgin to keep up with that product when it hits the market. It's on 4 A380s. I think 2 have it at the moment, to Charles de Gaulle. All about the French. Go to my shameless plug, my Twitter and my LinkedIn. It does well on LinkedIn. You know my obsession.
I know. I do know your obsession. All right, coming up on the program, Anna, something else I know you love to talk about, crypto coaster, taking another plunge as Tesla founder Elon Musk stays skeptical on Bitcoin. That story next. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I think Bitcoin will be somewhere between 40 and 55,000 for the next chapter before it kind of builds up enough new momentum to take out that 55,000 and end the year much higher.
How concerned are you about the short-term volatility being introduced by Elon Musk?
Listen, Elon Musk is an important figure in American business, and certainly in the global retail crypto world, he's a bit of an icon. He was great for crypto when he was positive for Bitcoin. He's caused some issues. I think if you take Elon at face value, though, what he said was he worried that as Bitcoin used more and more electricity, which it will, it could have a negative impact on CO2 emissions. That's true for every industry. And so I think you're going to see a response from this industry, like you should see a response from every industry to say, hey, in this gap of time before all electricity is green energy, which I think is 7-8 years away, we should do something to offset our footprints. And that's in banking, it's in crypto, it's in tech, it's in industrial businesses.
Is it problematic that like one of the hottest currencies is a joke, Doge, and that Elon Musk, who is this sort of face of it all, is essentially whipping people into that one and sort of multiplying the jokes? And you have other influential people talk about even other jokes, and that this sort of does it make it harder to put on a, basically make the case that there's a serious industry with a straight face?
Well, listen, yes is the answer. I don't want to discredit the Doge community or any of these communities, right? What you're seeing here is a response against the monetary policy of the U.S. and the world and the frustration people have had with the system. And this young generation has said, hey, we can band together and create our own way of investing. Some of it is frivolous and I think will end in tears. And so we try to steer our clients away from projects that we don't think have long-term sustainability. But it proves something that communities can band together. Right? The world has gotten very tribal, and that's not necessarily a good thing. And if you go on like crypto Twitter, you really realize just how tribal it's gotten. You know, one of my buddies made some negative Doge comments, and he got 6 death threats. And so that's not good. But I do think let's not miss the forest through the trees. Underneath it all, there's a huge revolution going on run by serious people who are trying to rebuild the financial market infrastructure in this place.
Galaxy Digital CEO Mike Novogratz there speaking to Bloomberg, Sonali Basak and Joe Weisenthal, taking the long view, Madness, on the future of digital currencies. And staying in that space, Bitcoin continuing its volatile week, losing about a quarter of its value in the past 7 days alone. Token's collapse comes after Elon Musk blasted investors with a series of tweets questioning the environmental impact of Bitcoin mining. With us now this morning is Eric Lam, Bloomberg's cross-asset reporter in Hong Kong. Eric, now that we've had a bit of time to digest basically this about-face, this U-turn from Elon Musk, what do analysts see for the outlook of Bitcoin?
Yeah, I think to approach that question, you kind of look at it from 2 perspectives. First, from the institutional side, I think that this brings up those recurring questions of, you know, is Bitcoin useful or sustainable as a store of value, as a hedge against inflation, as a hedge against risk? And given the journey we've all gone on over the past week, and we've seen, again, that return of volatility, there is some pause now. The fact that this market has so much noise in it that the tweets of one person, albeit, you know, a very important person in business, has such a profound effect on price that does give mainstream investors, I think, a little bit more pause on this industry. Within the industry, I think, is once again that view of, you know, we've seen this before, we're going to see this again. Bitcoin has had these roller coaster rides of volatility in the past, and this might just be yet another blip for Bitcoin. If you've been around since 2017, if you've been around since even before that, Bitcoin's jumped up and down to even greater magnitude than what we've seen over the past week. So this is almost old hat at this point, and they're just looking at it as, do we still believe in this asset? Yes, then we're going to keep moving on.
Yep, well, every day that Elon Musk talks about it, it will stay in the zeitgeist and beyond. Eric Lam, thank you very much, our cross-asset reporter in Hong Kong, with the very latest on the volatility and the controversy around Bitcoin. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
पेमेंट देती है। सिंपली मैं यहाँ पे अपना अकाउंट जो है लॉगिन करूँगा और अकाउंट लॉगिन करने के बाद हम इस तरह से कुछ लॉगिन हो जाते हैं। इस पे करना क्या होता है, आपको हर 30 मिनट पे, घंटे में हर 30 मिनट पे क्लेम करना होता है। उस क्लेम में आपको जो है यहाँ पे बिटकॉइन कैश मिलता है, उसको आप सिंपली यहाँ से विड्रॉ करा सकते हो। बाकी मैं यहाँ पे पिछला भी आपको विड्रॉ दिखा देता हूँ। यहाँ पे ट्रांजेक्शन है, इसके ऊपर मैं क्लिक करता हूँ तो ये जो लोग विड्रॉ लगा रहे हैं, ठीक है, आज की डेट की यहाँ पे लगता है नहीं लगे हुए, लेकिन 15 की डेट के लगे हुए, आज तकरीबन 16 है, ठीक है। अब यहाँ पे टाइम पीरियड का भी ऊपर नीचे हो सकता है, बट पेमेंट अभी तक दे रही है, ठीक है। बाकी यहाँ पे मैं आपको अपना शायद विड्रॉ में जाके दिखाता हूँ कि लास्ट वाला विड्रॉ जो हमने इससे लगाया था वो यहाँ पे हिस्ट्री शो होती है कि नहीं होती, बट यहाँ पे हिस्ट्री शो नहीं हो रही, बट यहाँ से मैं पेमेंट एक दिखलवा चुका हूँ, ठीक है। सिंपली अब यहाँ पे हम क्या करने वाले हैं, दूसरा पेमेंट लगाने वाले हैं। तो सिंपली यहाँ पे आप मेरे अकाउंट में देख सकते हो जितनी अमाउंट है 0.002 मिनिमम हम लगा सकते हैं। उसके अलावा अर्निंग करने के लिए सिंपली आपको नाट रोड के ऊपर क्लिक करना होता है और क्लेम कर लेना होता है, ठीक है। और यहाँ पे देख सकते हो कब यहाँ से यहाँ पे 0. हम सिंपली क्या करेंगे, नीचे विड्रॉ का बटन मिल जाता है, यहाँ पे आपने क्लिक करना है, ठीक है। इसकी ट्रांसफर हुई है कि नहीं, या बिटकॉइन कैश यहाँ पे देख सकते हो। जो पिछली बार मैंने पेमेंट लिया था वो अभी तक यहाँ पे मौजूद है, ठीक है। पिछली बार भी 0.002 बिटकॉइन विड्रॉ भी लगा सकते हो, विड्रॉ इन्वेस्टमेंट की आप अर्निंग भी करोगे, ठीक है। जो नेक्स्ट साइड के बारे में हम बात करने वाले हैं, तो पहले इस साइड के बारे में बात करते हैं, इस पे हम पेमेंट लगाते हैं, उसके बाद नेक्स्ट साइड की तरफ चलते हैं। तो अकाउंट हो चुका है लॉगिन और अभी मैं सीधा जाता हूँ विड्रॉ के ऊपर और मेरा परफेक्ट मनी भी ओपन है और यहाँ पे मेरे परफेक्ट मनी में $27 की इक्वल अमाउंट पड़ी हुई है, ठीक है। मैं सिंपली क्या करूँगा, यहाँ से $5 का विड्रॉ लगा लेता हूँ। यहाँ से परफेक्ट मनी मैंने सेलेक्ट किया, उसके बाद यहाँ पे मैंने $5 टाइप किया और नीचे रिक्वेस्ट का बटन मिल जाता है, यहाँ पे सिंपली क्लिक कर दूंगा। उसके बाद मैं यहाँ से कंफर्म करूँगा। कंफर्म करने के बाद यहाँ पे जो है हमारा जो विड्रॉ है वो लग जाएगा ऑटोमेटिकली। तो यहाँ पे देख सकते हो बैच आईडी भी शो कर दी गई, हमारी पेमेंट यहाँ से ट्रांसफर हो चुकी है, ठीक है। अभी चलते हैं परफेक्ट मनी में, यहाँ से सिंपली रिफ्रेश करते हैं, ठीक है। मैंने यहाँ से रिफ्रेश किया तो यहाँ पे देख सकते हो 32 जो है USD हो चुके हैं। और बाकी यहाँ पे जो नेक्स्ट साइट आप उसी की बात करते हैं, ये साइड से पेमेंट मिल चुका है। अब नेक्स्ट फ्री अर्निंग साइट है, ठीक है। मैंने आपको इसका पहले भी पेमेंट दिया हुआ है, तो ये वाली साइट है गोल्डन प्राइस, इसका मैंने आपको पहले पेमेंट दिया हुआ है, ठीक है। आज सिंपली हम इसका नेक्स्ट पेमेंट लगाते हैं, देखते हैं। फ्री में जो है बिटकॉइन कैश की ये वेबसाइट है, फ्री में बिटकॉइन कैश आप इस साइड से अर्न कर सकते हो विदाउट इन्वेस्टमेंट के, और विदाउट इन्वेस्टमेंट के ये पेमेंट देती है। सिंपली मैं यहाँ पे अपना अकाउंट जो है लॉगिन करूंगा और अकाउंट लॉगिन करने के बाद हम इस तरह से कुछ लॉगिन हो जाते हैं। इस पे करना क्या होता है, आपको हर 30 मिनट पे, घंटे में हर 30 मिनट पे क्लेम करना होता है। उस क्लेम में आपको जो है यहाँ पे बिटकॉइन कैश मिलता है, उसको आप सिंपली यहाँ से विड्रॉ करा सकते हो। बाकी मैं यहाँ पे पिछला भी आपको विड्रॉ दिखा देता हूँ। यहाँ पे ट्रांजेक्शन है, इसके ऊपर मैं क्लिक करता हूँ तो ये जो लोग विड्रॉ लगा रहे हैं, ठीक है, आज की डेट की यहाँ पे लगता है नहीं लगे हुए, लेकिन 15 की डेट के लगे हुए, आज तकरीबन 16 है, ठीक है। अब यहाँ पे टाइम पीरियड का भी ऊपर नीचे हो सकता है, बट पेमेंट अभी तक दे रही है, ठीक है। बाकी यहाँ पे मैं आपको अपना शायद विड्रॉ में जाके दिखाता हूँ कि लास्ट वाला विड्रॉ जो हमने इससे लगाया था वो यहाँ पे हिस्ट्री शो होती है कि नहीं होती, बट यहाँ पे हिस्ट्री शो नहीं हो रही, बट यहाँ से मैं पेमेंट एक दिखलवा चुका हूँ, ठीक है। सिंपली अब यहाँ पे हम क्या करने वाले हैं, दूसरा पेमेंट लगाने वाले हैं। तो सिंपली यहाँ पे आप मेरे अकाउंट में देख सकते हो जितनी अमाउंट है 0.002 मिनिमम हम लगा सकते हैं। उसके अलावा अर्निंग करने के लिए सिंपली आपको नाट रोड के ऊपर क्लिक करना होता है और क्लेम कर लेना होता है, ठीक है। और यहाँ पे देख सकते हो 122 तोशिश यहाँ से भी अर्निंग हो चुका है, जो ऊपर ऐड भी हो चुका है।
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Good morning. Welcome to Bloomberg Markets, the European Open. I'm Anna Edwards, live in London. Mark Cudmore, our Markets Live managing editor, joins me in Singapore to take us through all the market action this hour. The cash trade is just less than an hour away. Here are your top headlines. Stocks climb despite concern over the pandemic. Japan's economy shrinks, and this year's World Economic Forum meeting is off. Mike Novogratz tells Bloomberg Bitcoin will be pressured for weeks amid Musk-induced mayhem. That's as Michael Burry makes another big short against Tesla. And US President Joe Biden tells the Israeli Prime Minister he supports a ceasefire between Israel and Hamas, a big change in tone. Welcome to the European Market Open. It's just gone 7 o'clock here in London this Tuesday morning, a little bit later than that in Singapore, of course. Let's get to Mark. He has been tracking the markets through the European night for us. Mark, what are the markets saying to you?
Good morning, Anna. Well, your first line kind of summed it up. Stocks are rising despite pandemic concerns. So the main story here is that overall we're seeing Asian equities perform very well. Their best day since early March. Outperforming is Taiwan stock market has really surged today. But generally we've seen tech do well. It's helped by the fact that the dollar is slightly soft generally. And this is despite the fact that away from markets, our big topic of conversation is increased restrictions again across the Asia region.
Let's get to some breaking news. We've got some macro data coming out here from the UK. Mark, we'll return to the story around the fight against the virus in Asia shortly. We're getting the unemployment rate for the UK economy. It's come in at 4.8%. The estimate was for 4.9%, and the prior number was 4.9%. So the market was anticipating we'd see no change in that unemployment number. In fact, the unemployment number has come down a little bit. This is data for March, so this is pre the reopening in any real sense for the UK economy. So we should keep that in mind. A big focus, of course, is when we're going to see a peak in unemployment, because the furlough scheme is still protecting a large number of jobs here in the UK. We are opening up the economy, more people coming back into the workforce, but Bloomberg Economics suggests we could see unemployment peak at 6% at the end of 2021. The furlough scheme will end at the end of September. So that's all some of the dynamics, I suppose, to keep in mind as we go through the year, and as we continue to focus on what the reopening of some of these developed economies can do to unemployment rates. Let's think about where we are on the bigger picture. That's the pound for you. We see a bit of upside for the pound, but a lot of that was intact before we got this number. Let's have a look at where we are then. Yesterday we saw modest drops really for European markets and US markets. Today we see expectations of a rise, modest perhaps in the US, but a little more than modest here in Europe, expecting to see some movement to the upside. We've heard that Italy is going to end its curfew on June the 21st. So in terms of the European dynamics around the virus, very different to the Asia conversation, and that may be being reflected in what we're seeing this morning. In terms of those US futures then, also pointing to the upside. I said modest, actually just improving in the last 20 minutes or so, moving further to the upside. Mark, what do you see in the GMM?
Well, there's three big themes to kind of draw attention to on the GMM. First of all, is this great equity performance we're seeing across the region, Japan and Korea leading it. But note that the Sensex in India is above that 50,000 level. It's really been remarkable how little pain there's been in the equity market given the humanitarian tragedy we're seeing in the country. Overall, that stock market also kind of going along with this general risk-on feel in stock markets across Asia and across the world. Two other themes are that commodities are strong yet again. Top of the list is copper, which we'll come back to later on in the program, and this is driven by what's happening in Chile overnight. And then the other thing is that dollar is weak again, and that's why we're seeing many other currencies showing up there at the top of on the green in the FX column, and that's because the dollar is weakening across the board. It's just very steady weakness across the dollar, set to test those multi-year lows in the Bloomberg Dollar Index probably in the coming days.
Yeah, why do you think then, Mark, that we're able to put these concerns around the virus to one side on certain days and make gains on risk assets. I mean, we're still dealing with some of the same headlines surrounding the clampdown on various levels of activity in certain Asian economies around the virus. That hasn't gone away. We could still be concerned about inflation or not concerned about inflation, depending on which side of the argument we fall there. It's not as if anything has really changed materially on either of those fronts.
So I think on the virus, there's two big things probably to take account of. One is vaccines are clearly working. If you take global daily fatalities, excluding India, the 7-day average has just fallen to the lowest level in 6 months. That's as of yesterday. And this is around the world, whether it's the US, UK, Israel, Hungary. Many countries that were previous epicenters of the virus are just seeing a complete slump in their numbers of fatalities. And that's because vaccines are really making progress. They're slowly winning globally, despite the tragedy that's happening on India. Now, the other thing to take account of the virus is we are seeing a really large divergence. Asian stocks and Asian assets have been really underperforming in the last few months as they go back into this next wave. So it's not that the virus news is having no impact on the global economy. It's that it's not yet a global story that we're seeing the resurgence in Asia. It's hitting Asian assets, but overall the rest of the world's doing okay. Perhaps the final thing to note on those extra two themes is the fact that India is the one exception. I said that Asia is underperforming. India hasn't really underperformed too much, despite it being the epicenter of the virus. That is one story I cannot explain.
Let me think about something else that's dominating things in Asia, and that is outperformance by Japanese assets today. We've got the Japanese stock market. I can see the Nikkei up by more than 2%. The Topix doing well as well. That's being led by the electric appliance sector. I know that Toyota is trading at a record, or has been this morning, because it's demonstrated some resilience to the chip headaches that have of course, messed up the production capacity of various global automakers. What do you make of the strong performance we're seeing in Japan? And of course, we've had GDP data out from Japan, but often that's quite backward-looking.
Yeah, there's two facets to this. One is it's just really a consolidation of the weakness that we've seen recently. Japanese equities have been underperformers in the last month or so. So they've been, lagging a lot of the region and globally. And this is just a little bit of a kind of a bounce back from that. Another one is some of those bottom-up stories that you've been talking about. Toyota's a prominent one, but there have been several good earnings stories in recent weeks and several good kind of announcements from Japanese companies. As for the macro data, it hasn't been positive. It's been very, very negative. But as you say, that's not what people are trading off at the moment. And Japan, we kind of know it's a sluggish, slow growth economy. People rarely kind of trade off the big macro stories in Japan quite the same way.
Mark, thanks for those thoughts so far. Mark stays with us, of course, all this hour. And remember, you can get up-to-date analysis and insight from Mark and his team. NLIV Go is the function to use on your terminal. Coming up on this programme, the crypto coaster continues. We hear from Mike Novogratz about what's next for Bitcoin. Plus, amid the Musk-induced mayhem, Michael Burry makes his own big bet against Tesla. We break down the details from this quarter's 13F filings, and we speak to Elizabeth Marino, France's diversity minister, on introducing gender quotas on executive committees, the talent pipeline, and ethnic minority representation in the boardroom. Is it time for France to start collecting a little bit more data on that front? We'll put those questions to her later. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it.
people who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Expect clear, concise conversation on Bloomberg Surveillance.
There's no vows in a digital future.
Come on, John, I just think it works.
It works. Fur and birds.
We've beaten this to death.
Watch weekday mornings on Bloomberg Television.
We expect purchases to continue at the current pace until we've made substantial further progress. Through that April employment report, we have not made substantial further progress, but as the data comes in, we as a committee will have to evaluate that and ultimately make a judgment on that. We will certainly give advance warning before we anticipate scaling back the pace of those purchases.
That was the Fed Vice Chair Richard Clarida saying that the US jobs report last month showed the economy hadn't reached a level that warranted scaling back the Fed's massive bond purchases. And in fact, Mark, he's saying, it's not time to talking about tapering just yet. It's interesting, in terms of the bigger inflation debate, I was reading a piece by our colleague Cameron Crees who was saying that, everyone's going to find data that supports their view over the next 6 months or so. If you think inflation's transitory, you're going to be able to find data that, at least at this point, looks as if you might be able to find data that supports that view. And if you think it isn't transitory, that it's becoming ingrained, you might be able to find data that supports that view as well. It's going to be a long time until we get to the bottom of this.
Yeah, look, I thought Cameron's piece on this was excellent, as it always is. I really found that, Richard Clarida wasn't going to say anything different. And as Cameron points out, you can always find data to back up your argument for the moment. One of the big problems of this transitory debate is that we're not going to have the conclusion, the answer, for many, many months. Many of the people we've asked in the last couple of weeks have said we won't know until early next year. So it's going to be a long time before we have the conclusion, and people are going to spin the data either way until then, which in many ways makes the Fed comments pretty boring for the next few months, unless they suddenly turn hawkish. We know they're dovish, so any dovish reiteration is just the status quo, and it doesn't really matter what the data happens. It's when they turn that we should pay attention.
OK, that is important. We'll keep that in mind as we evaluate the news flow. Now, Asian stocks and US futures have risen as investors weigh the pace of growth as economies reopen against virus cases that are spiking in parts of Asia. Investors will be watching FOMC minutes out tomorrow for any comments on tapering and inflation. We're joined now by Gareth McCartney, head of EMEA Equity Capital Markets at UBS. Gareth, good morning to you. Is now a good or a bad time to be talking about, in your world, in the equity capital markets world, is it a good time for businesses to be trying to IPO? We've seen quite a lot of that activity. It hasn't all gone smoothly, though. Things have been a little volatile. What's the overall environment like for IPOs at this point?
Look, the data suggests this is unequivocally a good time. We're on track for a record year for European IPOs. There's been a big catch-up story year to date in Europe relative to what we saw post-COVID in both the US and Asia. And I think the forward-looking guidance here will be taken very much from where do US interest rates settle and what the implications are of that for the secondary equity market.
Good morning, Gareth. We're obviously seeing a large part of this IPO surge in Europe this year is tech-driven, which makes sense because many of the new companies coming to market are tech. Is this more about tech companies specifically are willing to kind of give Europe their backing, or is it more just this general story that Europe is making much better catch-up progress on the IPO forefront across industries?
Yeah, look, the start of all of this is a strong secondary equity market. We're pretty much at all-time highs from an equity index perspective. That's giving vendors in potential IPOs very attractive valuations to compare their equity to. And you have an investor base that's looking to put money into what is now quite a tired bull market. And therefore, they're very open to exciting stories, most of which, as you suggest, have been found in the technology space, which is 50% of the people year to date.
Yeah, we're showing a chart now which shows the extent of the IPOs we've seen for Europe's tech industry, which is really impressive compared to recent years. A 21-year high in tech IPOs, something we haven't seen since Well, the dot-com boom, so we'll think about that for a moment. What about the areas where we've seen it be difficult, though, Gareth, and why is that? So I'm thinking of Alpha Wave, I'm thinking of Darktrace. It went fine, but they had to cut their IPO price ahead of it. Is it to do with, I mean, clearly Alpha Wave got caught on a bad day, perhaps. Is it to do with sentiment broadly around tech stocks, or are investors able to cut through with these individual stories?
Look, I think there's 2 points to address that. I think one is any specific story will have its own nuances, and that'll be examined on a case-by-case by investors. So I think it's important that you look at the broader theme rather than specific stocks. Secondly, it probably is an indicator that we're in an environment now where investors are getting more selective and the bar to coming to market has gone up. And therefore, we're a bit more sensitive to broader market sentiment at the point that these deals are specifically pricing.
How do you see the post-Brexit competition between London and many of the main continental financial hubs in terms of the IPO landscape?
Yeah. Look, the UK has continued to be a very attractive place for companies to list. There's a very high regard for the corporate governance. There's a very large pool of investors with a significant liquidity that like investing in the UK. And we're also seeing the beginnings of a more constructive environment from regulators as well to make the UK an attractive place to list. And certainly when you look at the discussion as to where you list, you are seeing the UK winning in many cases where investors are looking at the options of the US or indeed the UK, and they've proven pretty agnostic to where the stock actually lists, and they're really focused on the underlying equity story.
Gareth, we've seen a number of names in the travel space raising money during the height of the pandemic, speaking from a European perspective, and also more recently. How receptive are investors to that kind of money raising at this point, the kind that, you know, is needed to shore up balance sheets, essentially?
Yeah, the story for capital markets in 2020 was exactly that. It was post-COVID, investors looking for high-quality assets that perhaps were relatively distressed in the equity price, and investors were willing to look through the COVID crisis to the reopening and back those good quality companies. This year, it's been more a story of growth and IPOs and much more selective on the capital raising front, partly because so much got done last year. But there's no doubt for high quality stories, investors are willing to take a longer term view and support them with new equity.
Gareth, thanks very much. Gareth McCartney from UBS. Stay with us here a little bit longer on the programme on the European market open. 43 minutes to go until that European market open. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. President Joe Biden has told Prime Minister Benjamin Netanyahu that he'd support a ceasefire between Israel and Hamas. It's a shift in the US approach following days of rising criticism for not taking a stronger stance. It adds to pressure to end the violence that has so far killed at least 220 people, mostly Palestinians living in the Gaza Strip. Italy plans to phase out its curfew and restart the economy. That's as the number of COVID-19 cases is going down as the vaccination program steps up. If infections keep declining, Rome wants to remove the curfew for low-risk regions on June 21st. On Sunday, the number of deaths in Italy fell to 93, the first day below 100 since October. President Biden says the US will share at least 20 million doses of authorized COVID-19 vaccines with foreign nations by the end of June. It will be the first time the White House will release doses abroad that could have been used domestically. It's on top of 60 million doses of the AstraZeneca vaccine that haven't been approved for US use. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Mark, Anna.
Laura, thank you. Laura Wright here in London. Coming up on the programme, on a roll, SPAC listings pick up in Europe, but the boom is fizzling out in the US. More on this story next. This is Bloomberg.
markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Well, we're going to be spending a lot more than Netflix. Right now, it's between the two of us, we're spending $20 billion a year on content, and we expect to spend more than that. Together, right now, we have almost 100 million subscribers, and neither one of us have really deployed aggressively outside the U.S., and we're differentiated in a meaningful way in the U.S. now with the extraordinary IP that John and his team have built together with Discovery. It's a very differentiated and compelling offering.
That was the Discovery CEO speaking to us in the wake of the company's plans to combine with AT&T's Warner Media. Big change of strategy for AT&T, which we talked about yesterday, following that Bloomberg scoop. Let's get to another story. SPAC listings are picking up in Europe at the fastest pace since the boom started last year. While Amsterdam and Frankfurt have hopped on the bandwagon, so far London has missed out because of less favourable rules. But the UK's markets regulator is looking at SPAC listing changes in order to ramp up blank check IPOs in the British capital. Gareth McCartney from UBS is still with us. So let's talk about SPACs in Europe then, Gareth, and the potential for them. Do you see London catching up with others in Europe? Should London be trying to catch up with others in Europe on this front?
Look, we've seen over 100 billion of issuance in the US year to date. We've seen the beginnings of both Amsterdam and Frankfurt offering a pretty much pari passu product from an investor perspective, and therefore we would expect over the coming months a pretty significant pickup in issuance there. The UK has had some structural differences where historically we have seen SPACs in the UK which have been successful, and I would expect that the UK will converge to the same types of rules and structures we're seeing in Frankfurt and Amsterdam, and therefore will be a viable alternative for issuers as we go into the late second half of this year.
Gareth, I'm going to ask you a very difficult question. It's complex, but I'm looking for a simple answer, and I'm aware that everyone answers this has got a little bit of an agenda here. But where do you think we are in terms of the fate of IPOs versus direct listings versus SPACs? You know, some people say that, look, IPOs are a legacy thing that we're going to slowly fade out because people are going to go to either direct listings or SPACs. Do you think that's the case or not?
Look, I think vendors currently have effectively 3 or actually 4 very credible options. There's the M&A route, there's the traditional IPO route, and then we now have the potential to reverse into a SPAC or indeed do a direct listing. What history tells you, to date at least, is direct listings, unless you have a pretty mature and pretty diversified shareholder register before you get to your listing, are pretty challenging to do, and that's why you've seen such a small sample size. So they are very niche, I would argue. SPACs are, again, they're not new. These have been around for a long period of time. The volume of issuance is new, and we believe that we will see a normalization in the amount of issuance, and there will be the fact that SPACs will be a credible alternative. But I suspect as things normalize, it will only be the highest quality issuers and the big platforms that really have a voice in that market for the longer term.
What do you think, Gareth, is the biggest threat to the pace of, I mean, I know we've seen things slowing down in terms of SPACs in the United States. What is going to drive any slowdown there? Is it sort of regulation, accounting bodies trying to keep up with the latest developments? What's the threat?
I think it's a combination of 2 factors, I think, that you highlight. One is the regulatory outlook and the rules. And then the second part, I think, comes back to the general level of stimulus and low interest rate environment that we are in the economy, and therefore the amount of cash that sits on the sidelines. As we see interest rates normalizing, which we've begun to see in the US, the amount of money available for these issues will naturally shrink, and that will create a normalization of the levels of issuance that we're seeing.
You said, you know, SPACs have been around for a long period of time, but in many ways it feels like the market's just kind of exploded. Is that, you know, we're about to reach maturity once we get more regulation? Does that mean it's actually the period of kind of going through the evolution to become entrenched in the financial landscape?
I think given you had 80 billion of issuance in the US last year, you're over 100 billion this year. So I think there's no doubt they're around to stay. The key question is they have a 2-year window to find opportunities to find their acquisitions. So the clock is ticking on that. And so we'll have to see, how that plays out and how successful they are at finding the end targets. And then secondly, given the previous points raised, I think we will see a normalization in the volume and pace of issuance, which is unlikely to continue in the same vein that we've seen over the last 18 months.
Gareth, thanks very much for your time. Good to speak to you. Have a good week. Gareth McCartney, Head of EMEA Equity Capital Markets at UBS. Thanks for joining us here on the European Market Open. Coming up on the programme, we're going to be speaking to Elizabeth Marino, France's Diversity Minister, on introducing gender quotas on executive committees, the talent pipeline and ethnic minority representation, the extent to which France is measuring, collecting data on that front. What can they do? What do they plan to do to improve performance on these issues? We will talk to her shortly about that. We'll also be back to the market conversation. I can see futures increasingly positive, actually, this morning. We'll get back to that shortly. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
The importance of computing in all products is just going up and up and up.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European market open. Half an hour to go until the start of cash equities trading. And European futures pointing to the upside mark, and US futures increasingly positive. NASDAQ futures up by 0.7%. We've talked a little bit about where this is coming from, about the fact that markets are focused elsewhere rather than on the deterioration, I guess, in what we're seeing in the fight against the virus in some parts of Asia. But there are other stories that we need to focus on. And I know that you've been focused on something that's been happening in Chile. And it's an interesting story because it links into commodities, it links into politics and how politics changes post-pandemic.
Absolutely, Anna. I think this is a very relevant story for the European audience. I think people are going to wonder why a country of 19 million people, it's got an economy only slightly bigger than Finland's. Why is this particularly relevant to what's happened in politics there overnight? And what's happened is the left-wing groups have won kind of power to rewrite the new constitution. But that's not the only thing. There's also a new royalties bill that's going to just pass through the lower house last week that now looks set to come through on the mining industry in Chile. And the reason this is so relevant to all readers out there is the fact that Chile is by far the world's largest copper producer. It produces more than twice as much copper than the second biggest producer, Peru. And we know that copper has been one of the key elements of driving this massive commodity surge that is playing into the whole inflation story. So the inflation story is the biggest theme of this year. That comes from the commodity story. And that commodity story is actually very, very dependent on Chile. So this new government that's coming in, the new rules that might come in, people are saying this could be a really, really material negative for copper supply over many, many years to come. It's going to be a very, very tough situation. So it's going to squeeze supply, and supply really depends on copper. So some of the domestic assets there have been dramatic. We've seen the currency fall by more than 2%. We've seen the stock market fall almost 10% in the worst collapse since March last year. Those don't matter as much as the global implications for copper and for inflation and for the story everywhere.
Yes, and we have already seen that some of the Asian mining companies have benefited from this because, of course, if supply is constrained, that can be positive for price. And we've seen some of the Asian copper miners moving higher. We'll see what this does to the London-listed mining sector when we open up in around 28 minutes' time. Let's step away from the markets, though, for a moment and turn our attention to something else political. Let's turn to France's efforts to boost female representation in the C-suite. The lower house of the French Parliament has passed a draft bill which mandates gender quotas in executive committees. Companies will need to have 30% women by 2027 and 40% by 2030. It follows the success of board quotas imposed in 2011, requiring companies to have at least 40% by 2017. Within the EU, France is the only member state to have achieved this, a figure it first reached in 2016. We're joined now by the French Diversity Minister, Elisabeth Moreno. Minister, very good to speak to you. Thanks for joining us here on Bloomberg Television. So we want to start our conversation thinking about this bill that was passed in the lower house, quotas for women on the executive committee. What have you learned from the way that quotas have worked elsewhere in the economy that makes you confident this is the right move?
Good morning, Anne and Mark. I'm very pleased to be with you this morning. Look, what I have learned, just for you to know, I have spent the 30 past years of my life in the corporate world. And as a female leader, I have always dreamt about this moment where we will consider women for their competence. And this is exactly what is happening in France now. You know, we have been speaking about these things for quite a while everywhere in the world, because I have been lucky to work with American companies, with Chinese companies, European companies. And, you know, women have always had to face this glass ceiling issue. And France is fighting against that now. And actually, we started fighting against that with the law Copé-Zimmermann, who permitted us to move from 9% of women on boards in 2009 to 10 years later, 45% women. So it just means that with laws, you can push the boundaries and make things happen.
You say we've been talking about it for a long period of time, and that's indeed correct. I mean, this is one of Macron's campaign promises 4 years ago. Why did it take so long to get this bill through? Is it because it was politically difficult, or is it because of the underlying costs for businesses?
You know, I think we are really going through a kind of cultural shift where everybody knows that diversity in companies brings a very positive performance. But still, you know, in France, like almost everywhere in the world, you have less than 30% of women leading large companies. And in France, for instance, among our 120 largest companies, we have less than 30% women leading these large groups. And we have had to wait for Emmanuel Macron to decide that gender parity would be his great cause, to see a significant difference between all sphere of our country when we speak about politics, when we speak about economics, social activities, cultural activities, and so on and so forth. So I really believe that the right combination is the combination between public policies, what the associations are doing on the floor, because I can tell you that feminists are fighting very hard to make things happen, but also the evolution of companies who have really understood that they couldn't leave aside 52% of the talents. Talent scarcity is becoming a real issue everywhere in the world. And I think after this very difficult moment we have seen with the pandemic, where women have suffered a lot, it's really time to stop talking and acting. And that's exactly what France is doing.
And is it time to act differently when it comes to improving the representation of ethnic minorities, Elizabeth, on boards or in other parts of public life? I know in France it is not possible to collect diversity data on ethnicity. Is it time to change that?
Well, actually, it is possible to collect those ethnic data. But, you know, to be frank with you, I'm going to tell you, I'm a black woman. And I'm going to tell you very sincerely that you don't really need to collect data to know all the inequalities that minorities are facing. Yesterday was the day to fight against homophobia. We know that we have these discriminations against LGBT plus people. We know we have these inequalities on gender. We know we have these inequalities on ethnicity. And all these things have very well been understood. And that's the reason why we have launched in February last year a platform to fight against all kinds of discrimination. We have 25 criteria of discrimination that are prohibited in our French law. And I can tell you that we are not lacking laws. We are lacking respect of laws. And I am really fighting against all these discriminations because they are unacceptable. They all touch our human dignity, and we all need to fight against that. And it's not only a question of my ministry, it's a question of the entire government being mobilized against these discriminations.
So, Minister, why take a different approach around ethnicity to the approach that you've taken around getting more women into the workforce? You say that quotas have worked there, and yet you say, yes, you say you can collect data on ethnicity in France, but I understand it's more limited than the ability to collect data around gender. Do you not think you need to have targets around ethnicity also, or is that not part of the French agenda?
So it is, for the moment, it is not part of the agenda because, you know, in France we have this philosophy that we call universalism, which means that in the French Republic we only want to recognize people per se, not because they are women, not because they are LGBT plus, not because they have a different ethnicity or whatever. And what we are trying to do is to fight against, again, all kind of diversity, and I have decided to take some measures with the government, like how to make sure that diversity is considered in a more broadly manner across any companies, because one of the very first discrimination we recognize in our country is discrimination in the employment, right? Whether it is on the recruitment or on the mobility, career mobility. So we are creating a tool that we call diversity index, which aims to measure the level of diversity of our companies so they can make the right decisions on how to hire, how to train their people, how to sensibilize their human resources, and make sure that people understand that diversity is not a threat. Instead, it is something that can really help any company to perform, as we have seen in many studies. So we have ways in our law to measure the level of diversity of companies, and we are going, and they are very legal, and we are going to use those tools so companies can develop their ways of recruiting, and they can be much more inclusive than they are today.
OK, so there are other ways. Minister, thank you very much for joining us. Elizabeth Marino, French Diversity Minister, thanks for spending time with us here on Bloomberg TV. Let's get a Bloomberg Business Flash. The top corporate stories we're covering today. Here's Laura Wright.
Thanks, Anna. Amazon is reportedly in talks to buy movie studio MGM. That's according to The Information and Variety. It would be the e-commerce giant's biggest push into entertainment yet. Variety says the deal could value the company behind the James Bond films at $9 billion. MGM and Amazon declined to comment on the reports. Half a dozen senior bankers at Credit Suisse have left the firm in recent weeks. They're the latest in a raft of defections following the implosion of Archegos Capital Management. The Swiss bank was the biggest loser from the collapse of the firm, writing down $4.7 billion. It slashed the money set aside for bonuses to limit the financial hit. Apple is said to be facing continued delays in delivering its new high-end iPad Pro. It officially goes on sale in about a week, but supply chain issues mean buyers may not be able to get their hands on one until deep into July. Bloomberg sources say Apple's partners are struggling to produce the screens in large quantities. That's your Bloomberg Business Flash. Mark, Anna.
Laura, thank you. Laura Wright here in London. Coming up on the programme is 13F Day. We have a look at how the biggest hedge fund managers spent their cash in the first 3 months of the year. That is coming up next. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European Market Open. 15 or so minutes to go until the start of cash equities trading. European equity market futures pointing to the upside, focusing on growth optimism, perhaps a little bit the reopening story in Italy, rather than focusing on the fight against the virus in parts of Asia. Now, last night, let's turn back to the markets now, shall we? Last night was the final deadline for hedge funds to file their 13Fs. This gives us a glimpse into the moves by major hedge funds during the first quarter of 2021. A hectic quarter marked by Reddit-fueled trading and the implosion of family office Archegos Capital. We remember it well. Danny Berger certainly does. She's here with some of the highlights from those 13F filings. Danny, good morning. Any big themes, then, that most funds seem to be playing on during the past quarter?
And I think it's really interesting to see tech be a pretty big focus of this earnings, of this 13F rather. And they really sort of played on to this idea of tech underperforming in the first quarter, or perhaps they even contributed to it. Look, we already know that hedge funds had a pretty sizable short on the sector, but here we can see what happened to some of the long positions. So we don't really know whether a lot of these funds abandoning tech had to do with concerns over high valuations because of the inflation trade, or perhaps just sort of this stay-at-home trade fading. But a result of that is we saw funds like Coatue and Whale Rock cut things like Peloton, CrowdStrike, Zoom, those falling out of favor, of course, after being favorites last year. And it's also interesting to see some of the other high-value names like Tesla take a hit. Now, this is one very specific trade. It's gotten a lot of attention overnight, and that's Michael Burry of Big Short fame putting a short position against Tesla, specifically buying about 800,000 contracts worth of put options because of the opacity of 13Fs. We don't know when he made this trade, when these puts would have expired, but it probably stands to reason that he would have made money off of them, considering Tesla did fall in the first quarter.
Good morning, Danny. And if tech is one side of this trade from the 13Fs, how did hedge fund managers treat the more cyclical parts of the market?
Yeah, it probably would stand to reason if they're dumping sort of the stay-at-home plays, the big high-value names, that they'd go into cyclicals. But this was a little bit more uneven. Warren Buffett, I think, is sort of an interesting barometer here because he's always a guy that says don't bet against America. But Warren Buffett continued to cut his financial positions. You know, maybe this is him saying that interest rates are likely to remain low, but he exits Goldman Sachs, gets rid of Wells Fargo to a large extent, something he's been doing for a while, cuts JP Morgan. However, he did dive into Bank of America. This is quickly becoming a very large holding for Warren Buffett, and they, of course, have a big consumer exposure. Now, that's Warren Buffett. We did see other managers like D1 buy more banks, for example, so that's not necessarily an even look. But again, I think it's interesting, Warren Buffett going all in on one bank, but not necessarily betting on the entire sector.
Danny, thanks very much. Danny Berger with the latest that we can glean from the 13F filings. Now, a growing divergence is emerging between the East and the West as parts of Asia struggle with a pickup in virus cases and slow vaccine rollouts. Let's get more with Juliet Sali in Singapore. Juliet, a raft of developments in the last couple of days. Of course, we should state the obvious that case rates are still much higher in some developed markets where we're seeing opening up as the dominant narrative than they are in some parts of Asia. But the strategy, the culture around handling this has been different from the start. Tell us about the way that the virus resurgence is showing up in the data then in your part of the world.
Yeah, absolutely, Anna. I mean, you look here in Singapore, yesterday we had 21 cases, and that has caused us to go into a partial lockdown. 21 cases in your part of the world would probably be something to celebrate. But the concern here is that it is the biggest pickup in a number of cases in Asia, excluding India, as you can see in my chart here. And it's all happened very, very quickly. Now, just a few weeks ago, our own reporting was saying Singapore was the place to be to weather the pandemic. The concern here is that we've had 42 unlinked cases in the past week, up from 7. So there's concern that is this spreading more broadly through the community, and of course concern in other parts of Asia as well, the likes of Taiwan. So that has caused a raft of things to change very suddenly. We know that the Hong Kong-Singapore travel bubble has been shelved again. The World Economic Forum, slated for August here in Singapore, has also been put off. And it is showing through in the data too. We had Japan GDP figures coming through today. This was a bigger shrink than expected in the first quarter, down 5.1% on an annualized basis, and really causing these concerns about whether or not you're going to see a double dip recession coming through in Japan. And of course, Mark, putting questions on other big events too. Are the Japanese Olympics going to go ahead?
Absolutely, Juliet. And we were discussing earlier in the program about how vaccination programs clearly work. They're making slow progress. So where is Asia in terms of the vaccination rollout, and how will that affect the overall global recovery?
Well, this is the thing, because a lot of these Asian countries have relied on COVID zero, so the fact that there was very little transmission in their community. So the pickup of vaccinations is not as high as it is in the other parts of the world, you say Europe and the US, and that is where you are starting to see some big divergence coming through between the East and the West. So as you can see here on the chart, Singapore has administered 55 doses per 100 people. In terms of the number of people completely vaccinated, it's about a fifth of the population, and as you can see, Japan, Taiwan, very much lagging behind. Daniel Moss from our Bloomberg Opinion columnist, he puts it quite well. Shouldn't a country, he's talking about Singapore, with one of the highest per capita incomes be aiming higher? He says Singapore, for all its achievements, has a way to go. And he's talking about a lot of these COVID zero nations that are relying on little transmission rather than vaccination pickups, saying striving for perfection may end up being their deepest flaw when it comes to the overall global reopening. Anna Mark.
Yeah, really interesting. And you wonder how that low vaccination rate in Japan weighs in onto all of the conversations around the Olympics. Juliet Sarli, thank you very much. Juliet Sarli bringing us the latest there in Singapore and beyond. Coming up on this programme, we'll look at your stocks to watch, including Imperial Brands, as the UK tobacco company's profit climbs. More on this story next. This is Bloomberg.
Have you ever thought of bottling your happiness? And you know, you could make a lot of money if you bottled your happiness.
Yeah, you know what it is? It's just gratefulness. I should have died in that field in Iraq.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Welcome back to the European market open. 7 minutes until the start of cash equities trading for this morning. You can see that equity market futures points to the upside, increasingly so. Nasdaq futures now up by 0.9%. Let's get the stocks we're watching here in Europe. Danny Berger has a breakdown, and you start with Heineken.
That's right, a Bloomberg scoop here, Anna, that Heineken is looking at possibly a takeover of a South African wine and spirits maker called Distell. They're working with advisors. They've made an approach, sources familiar tell us. So Distell has a market value of $2.3 billion, and this would be one of Heineken's most significant transactions in years. Interestingly, their earnings, South Africa was one of their best performing markets. Now, sticking with sort of the sin theme here, Imperial Brands also out with earnings. They do seem to tobacco profitability getting better throughout the rest of the year, just basically maintaining their forecast, but did warn they could see higher taxes in the U.S. as the country looks of ways to sort of make up for that pandemic spending. Finally, Siemens, it's clear that they are flush with cash because a lot of deal news here, buying a U.S. electronics value chain operator yesterday, and today a Spanish outlet reporting that they might delist Siemens Gamesa, and they would do so, of course, by buying back the shares. So also look for that specific unit of Siemens to also rally today. Anna Mark?
Thanks very much, Danny Berger, our markets reporter, of course, taking us through that. Mark, just time to quickly wrap up a few loose ends, things we haven't touched on. And I think one of the important ones, in fact, you suggesting we mentioned the dollar, and it is on the move, isn't it? Down by around 0.25%. I was reading some research from Barclays that was saying the dollar would retain bids because of growth strength and also haven demand. And I started to wonder whether the Asian resurgence of the virus would add to haven demand around the dollar. That's certainly not the story this morning, though.
We're not seeing it at all. In fact, the Bloomberg Dollar Index is at the lowest level since January 7th, so just over 4 months. And we're only about 0.5% from the 6-year low in the Bloomberg Dollar Index. And it's really broad strength. This is not about one currency. We're seeing euro dollar, we're seeing cable, we're seeing across the board, we're seeing in Asia, we're seeing currencies reach towards multi-month highs there. I think this is going to be an ongoing theme of the next months or many years, perhaps. The idea, if we're going to have a dovish central bank, even though inflation is coming, that means we're going to have deeply negative real yields, and that is not good for the currency.
Not good for the currency. We'll keep an eye on that one then. Yes, certainly we are seeing the Australian dollar, New Zealand dollar, as you say, a host of currencies moving to the upside, the pound, the euro. General risk appetite perhaps being expressed through FX markets in that form. Mark, thank you very much for spending the past hour with us. I'll be back with the market open. That's coming up next. Futures pointing increasingly to the upside. So markets focusing on the global growth story, the reopening story, certainly part of the European narrative this morning. We'll be back with how these markets open up this Tuesday morning shortly. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit Search Go to find answers now.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Welcome back to the European market open. A minute to go until the start of cash equities trading. Here are your headlines. Stocks climb despite concern over the pandemic. Japan's economy shrinks and this year's World Economic Forum meeting is off. Mike Novogratz tells Bloomberg Bitcoin will be pressured for weeks amid Musk-induced mayhem. That's as Michael Burry makes another big short, this time against Tesla. And US President Joe Biden tells the Israeli Prime Minister he supports a ceasefire between Israel and Hamas, a big change in tone. Let's take a look at the futures picture then. With all that in mind, all the geopolitical tension, all the virus fighting that is going on, certainly in parts of Asia, and the vaccine rollouts in many parts of the world. Let's have a look at where we are. Futures pointing to the upside, to the markets firmly focused on the positives this morning. We've heard about Italy ending its curfew on June the 21st, a few other reasons to be a little bit more hopeful. Vaccine rollout continuing at pace here in many parts of Europe, certainly across the European continent, at a faster pace than it started. And so all of that adding up to higher expectations, perhaps, for what we can achieve here. Putting to one side the concerns around the resurgence of the virus in Asia and the clampdown measures that we're seeing in some parts of Asia as a result of that. So European equity markets, let's have a look at where they opened this morning. We are expecting, as I said, the futures pointing higher, and we have got some moves to the upside. So the FTSE 100 up by just shy of 1% right now. The CAC 40 up by 0.6%. The IBEX over in Spain up by 0.7%. There's quite a lot of movement in the French media space. That's something that might be supportive of the French market this morning. We'll return to that story shortly. And we've had a bit of M&A to talk about this morning as well in some sectors, and a little bit of corporate reporting too. So we'll add all that together and see where that takes us as we wait for just the Xetra DAX to open here in Europe. We have most of the other European equity markets open. Now, Asian stocks and US futures have risen, with investors weighing the pace of growth as economies reopen against a pickup in virus cases in the region. Looking at the current cycle, investors can't agree on what phase we're in due to a wide range of uncertainties, and it's making it difficult to strategize on what's next. Let's get the thoughts then of James Rastey, CIO of Coast Capital, who joins us this morning. James, really nice to speak to you. We'll get to a conversation about your specific holdings, your specific investment strategy a little bit later. But just in terms of the bigger picture, we've been reading a lot over the last few days about where we are in this cycle, whether we are early stage, if you think that the sell-off last year marked the start of it, or whether we're late in this cycle, if you think that this started back in 2009 or so. What is your thinking, James, and where do you see us?
Really nice to be with you. I must admit that it's very difficult for us to know what stage of the economy we're in, because we would need to put what's happening in the world in the context of what we've experienced before. But the fact is, we've never gone through a cycle with government intervention and money printing being such an important part of the overall consideration, and with interest rates being quite as low as they are and being negative in the case of so much debt being printed in the world. So I think that this is a very different cycle from ones we've previously experienced. And I think that if the government intervention, support for markets and printing of currency were to stop, we would be at the very end of the cycle, right? And if it were to continue, we could be at the beginning or in the middle. So we're in a really perverted sort of set of circumstances that I think make for a very messy picture.
So a lot of it depends. So we're at the mercy of central bankers then, James. I guess that's maybe to summarise your view. You mentioned their negative rates environment, and certainly that's been a feature of some European capital markets or European government debt markets. Do you think we're moving away from that, though? There have been quite a few people talking about, we've seen a bit of a build in the German rates environment, for example, and maybe we are going to see a positive number on the German 10-year Bund at some point, James. Are we moving in that direction? Is that something you're banking on?
It isn't necessarily something we're banking on because the outlook is so uncertain all around. But I think that they will move away from it. And I think that inflationary pressures building up in the system will probably force us to a certain extent to head in that direction. And that makes it very difficult to know what bankers would and should do then. I think that we in the world have enjoyed a lot of disinflationary forces for the past several decades. You look at the moving of manufacturing to low-cost offshore centers. You look at a much more efficient integrated global supply chain, and you look at a much freer movement of labor in Europe and in North America, et cetera, et cetera. And a lot of that is coming to end and is actually reversing. And so the forces that had led to disinflationary circumstances that we've experienced are now reversing. And I think that that has really large and ultimately misunderstood consequences for the economy.
Yes, and how much is that changing? Are we seeing a sea change in that narrative as well, James? You talk about how disinflation has been a feature of the past decades, and some who aren't too concerned about inflation say, look, it'll take, it's too difficult to try and break that. That is fully entrenched, and just the small pick-up in inflation that we're seeing at this point is going to be transitory, and we'll soon be back to that disinflationary narrative. Others say inflation is a real game changer this time around. Something substantial is changing. What do you think?
Well, I think that one of the few things in the world that you can count on is the constancy of human nature and how fallible we are and how silly we are, and how we refuse to learn from history. And I think that the idea of muscle memory is one that we don't talk about, but that I think is an important consideration. Going through, again, decades of disinflationary pressure will teach one and will teach prognosticators to expect more of the same going forward. And when you see a sea change in circumstances, I think it's quite easy to dismiss the changes that we're going to see going forward. So I don't know. I really do think that we're in a period where inflation is going to pick up. Inflation in specific things that are in scarce supply, like gold, for example, like commodities. And I think that there's probably a great deal of misunderstanding around that. And I think that that will provide a bit of a shock to the system and how central banks react or counter these trends. I just don't think that there's any particularly attractive option for them in dealing with the cards that we're going to be dealt going forward.
Okay. We will pick up on that conversation shortly, James. Thank you very much. James Raste from Coast Capital stays with us. We'll pick up on his thoughts on gold, inflation, and some of his strategy around some of his holdings in just a moment. I just want to get back to one of the stocks that we said was in focus, and that is Heineken and its intentions in South Africa. Danny Berger brought us this story earlier on. Our colleagues bringing us a Bloomberg scoop, which said that Heineken was said to be weighing a deal for the South African brewer Distell. Well, we are getting confirmation this morning. The Distell Group in South Africa issuing what's called a cautionary announcement saying that Heineken has approached with regards to a potential acquisition. Distell is in talks with Heineken. So just getting some confirmation there. The share price of Heineken, you can see, not moving all that far. We will keep across that story. Coming up on this programme, it's tumbled around 30% since hitting a record high last month. But the CEO of Galaxy Digital says Bitcoin is likely to remain under pressure for weeks to come. Our interview with Mike Novogratz, that's next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the European market open, 9 minutes into our trading session here in Europe. And we've got European equity markets in the main moving to the upside. So we see the overall stock 600 up by 0.7%. The Xetra getting the best of the gains, up by nearly 0.9%. Let's dig into some of the individual movers. Bloomberg's Danny Berger is here. Danny.
And a little bit of action in the takeaway space. Just Eat Takeaway itself is down. It was down more than 1%. It's sort of eased some of those losses. But in focus here is an FT story that DoorDash has put postings online for job listings in Germany. So a lot of these types of food delivery companies likely to face new competition. Now, to the upside, one of the biggest gainers today is Vivendi. And at issue is their holdings of Universal Music Group, which, of course, is supposed to IPO in September. 10% of their stake they might look at selling, though they say they're going to hold on to it for about 2 years, also looking at some new governance structures when it comes to Universal Music Group. Also, we are seeing just the mining sector do really well. So the materials sector, Norsk Hydro, one of the top gainers today, but BHP also doing well. Of course, a lot of this is because of the macro picture. So let's get to that because we are seeing iron ore continue to gain. Brent is also higher today as well. A lot of demand there when it comes to the key markets like the U.S. And despite some of the lockdowns in Asia as well, of course, helping Brent is that weaker dollar. The Bloomberg Dollar Index now at its weakest since January. Anna?
Danny, thanks very much. Danny Berger with the latest on the movers. Just want to add another stock to the mix that Danny's been talking about there. Vodafone, huge weighting on the London market, of course, and that stock down 6.4% this morning. It means that the telecom sector is the only sector in negative territory today here in Europe, and it is being weighed down by Vodafone. Vodafone organic sales revenue actually came in better than was estimated, but for some, certainly over at Goldman's, it's the capital expenditure hike that's overshadowing the growth trajectory. And so we see that stock moving to the downside this morning. Let's switch focus to cryptocurrencies. One of the biggest investors in Bitcoin has told Bloomberg it's likely to remain under pressure for weeks to come. But despite tumbling 30% since hitting a record high last month, Mike Novogratz of Galaxy Digital says he still expects Bitcoin to finish the year higher.
I think Bitcoin will be somewhere between 40 and 55,000 for the next chapter before it kind of builds up enough new momentum to take out that 55,000 and end the year much higher.
How concerned are you about the short-term volatility being introduced by Elon Musk?
Listen, Elon Musk is an important figure in American business, and certainly in the global retail crypto world, he's a bit of an icon. He was great for crypto when he was positive for Bitcoin. He's caused some issues. I think if you take Elon at face value, though, what he said was he worried that as Bitcoin used more and more electricity, which it will, it could have a negative impact on CO2 emissions. That's true for every industry. And so I think you're going to see a response from this industry, like you should see a response from every industry to say, hey, in this gap of time before all electricity is green energy, which I think is 7-8 years away, we should do something to offset our footprints. And that's in banking, it's in crypto, it's in tech, it's in industrial businesses.
Is it problematic that like one of the hottest currencies is a joke, Doge, and that Elon Musk, who is this sort of face of it all, is essentially whipping people into that one and sort of multiplying the jokes? And you have other influential people talking about even other jokes. And that this sort of does it make it harder to put on a, basically make the case that there's a serious industry with a straight face?
Well, listen, yes is the answer. I don't want to discredit the Doge community or any of these communities, right? What you're seeing here is a response against the monetary policy of the U.S. and the world and the frustration people have had with the system. And this young generation that said, hey, we can band together and create our own way of investing. Some of it is frivolous and I think will end in tears. And so we try to steer our clients away from projects that we don't think have long-term sustainability. But it proves something that communities can band together. Right? The world has gotten very tribal, and that's not necessarily a good thing. And if you go on like crypto Twitter, you really realize just how tribal it's gotten. You know, one of my buddies made some negative Doge comments, and he got 6 death threats. And so that's not good. But I do think let's not miss the forest through the trees. Underneath it all, there's a huge revolution going on run by serious people who are trying to rebuild the financial market infrastructure in this place.
That was the Galaxy Digital CEO and founder, Mike Novogratz. James Raste from Coast Capital is still with us. And James, I think you have a very different view on the prospects for Bitcoin, cryptocurrencies. Is it the whole asset class, or is it just the one?
And I really wish you wouldn't ask me this just now, because I actually know Mike and have a lot of respect for him, and I really like him a lot. And he's an extraordinarily gifted human being as an investor anyway. But look, Bitcoin for me is a Ponzi scheme and an absolute lie built on a whole bunch of fraud. If you look at forget about the ecological disaster that it is and that it continues to be for serving no purpose that I can see. You cannot conduct transactions with Bitcoin, right? There was a lot of excitement when Elon Musk came out and said, we're going to take Bitcoin as payment for your Tesla. And the one man who tried to pay for his Tesla with a Bitcoin had a 30-minute window in which to effect this payment. And that was not long enough to transfer the Bitcoins that needed to be transferred, okay? It's an extraordinarily inefficient mechanism for payment. So then you say, okay, then they try to reinvent the idea of Bitcoin as a store of value. Well, guess what? Commodities are going up in price. If ever there was a window in time for a purported store of value to prove its worth, this is it. So as commodities go up and as inflation begins to show its head, crypto declines precipitously because some, unpredictable CEO makes a comment about it, and that affects its entire value and brings the entire ecosystem into question. So it's fundamentally an unsound and ill-conceived invention. The biggest problem I have with it is you need to, when I dig technically into Bitcoin and what it stands for and what it does, more than 50% of Bitcoin in the world is bought with tethers. And this is a topic that people don't look into and don't understand. And so when you want to buy a Bitcoin, you send $1 and you buy a tether. And supposedly for every tether out there, there is $1. And so you use the tether then to buy your Bitcoin. Well, the fact is there's supposed to be, and the people who have created Tether have said that there would be $1 for every tether. They've taken $1 and they create a tether, but in fact, there are a lot more tethers than there are dollars. So if people want to trade their Bitcoin back into dollars via tether, the whole thing would collapse. The whole Bitcoin ecosystem would collapse. And even if it does make sense, even if cryptocurrencies do get adopted, Bitcoin is probably going to be the AOL of the ecosystem, right? Ethereum is a superior cryptocurrency from a technological perspective. There will surely be another that is even better than Ethereum. So why would I pay $50,000 to own a piece of nothing that I know for a fact will be made obsolete within a few years?
Okay.
It is the height of folly.
But the things... So the criticisms you make of Bitcoin, are they about Bitcoin specifically? They're not about the alternative coins. You have more time for some of the others.
Anna, it really is about Bitcoin, and it's about the whole ecosystem, and it's about the fact that at the end of the day, every cryptocurrency that reigns supreme for the moment will be displaced by a technologically superior one down the road. So, and by the way, none of it is useful. You can't use it to conduct transactions. It's way too inefficient. To conduct a Bitcoin transaction takes over 60,000 times as much processing power as an average credit card transaction. The whole thing, we published a paper saying Bitcoin is an ecological and monetary disaster, and it happens to be worth zero. I didn't get any death threats because I'm nowhere near as well known as Mike Novogratz's friends, but I did get contacted by the chief technology officers at some of the biggest companies in North America and some of the biggest tech companies in North America who pointed out the extraordinary flaws in the whole blockchain architecture. So I think that the assumptions that are made by the crypto community are led more about the excitement of being part of something new. But, this new thing hasn't found the proper use yet. And it's been around for well over a decade now.
James, thank you very much. Stay with us, if you could, for a little bit longer on the programme. James Raste, CIO of Coast Capital, will get his thoughts on specific holdings. That conversation coming up next. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Welcome back to the European market. Open 22 minutes, just about into our European equity trading session and moving to the upside across European equity markets. So James Raste from Coast Capital is still with us. And James, thanks for staying with us, because I wanted to ask you about one of your specific holdings, and that is First Group. You're a shareholder in First Group. You've been urging other shareholders in First Group to come around to your way of thinking, and that is to oppose the disposal of the company's First Student and First Transit. So this is yellow buses, yellow student buses in the United States. James, just to clarify, tell us how much of the company you own, and do you have the support of other shareholders in voting against this particular asset sale?
We're absolutely outraged. Yes, we do. We're the largest shareholders here. We own about 15% of the company. And, I have to tell you, we've been contacted by many investors who are also absolutely frustrated with the proposed bid by this board, which I think is so ridiculous and falls so short of fair value for these assets that it's essentially an abdication of fiduciary responsibility, we believe, by the board of this company, right? So First Group, which is the largest school bus operator in North America and the largest transit services operator in North America, is proposing to sell our crown jewel assets, which account for no less than 90% of the value of the company. They're proposing to sell it for a negative premium to book value, okay? Like for less than 1x book value. The only comparable asset to have sold in North America was Student Transport Inc., which a couple of years ago sold for 5.6x book value. The gap in valuation is extraordinary, and we think that it's the result of a broken and flawed process.
Okay, and James, the company says, of course, they want to, they've taken advice, some of the advice you've been giving and others, to retreat from the global expansion. So I know you don't disagree on that front. It's the amount that you question. The company says they want to use this money to pay down debt, to fund their UK operations. Have you got support of other shareholders, though? Are other shareholders, enough other shareholders, of the same view as you?
We really hope so. We really do hope so. But we certainly have been contacted by a large number of investors and are in touch with other very large investors who are very displeased with this deal. I don't see how you could be pleased with this deal at all. You know, this company tried to sell a public transport business during a pandemic. That's like trying to hold the Winter Olympics in the middle of July. The timing was terrible. And a couple of days before the company announced the transaction or their wish for transaction, we had presented the company with much more attractive alternatives and with buyers who were willing to pay a notable premium to the EQT price, okay? And the company completely refused to engage with these other buyers. In a leaked email by the chairman to us, their advisor at JP Morgan, Rob Perlman, on the 22nd of April, said to management, look, the deal proposed by Coast could be seen to be 25% better than the one proposed by EQT, and you want to at least make them feel listened to. This board is trying to absolutely force investors in a 10-day period to vote for an absolutely inconceived bid, and the whole thing stinks to the heavens.
We will certainly reach out to First Group to get comments on some of the things that you've been saying there. I understand that Greyhound may also be up for sale. What would your response be?
You know,
to
that's
that?
another. We've actually been contacted by private equity firms who are interested in Greyhound and who are like, we're reaching out to management. They're not responding to us. There doesn't seem to be a process. What is going on at this company? It's an absolute abdication of fiduciary responsibilities, we think, by the chairman, by the board of this company. And we think that there's a lot of confusion. But we think that investors will do so well and so much better to vote against this bid. Before the presentation of this bid, the stock was 30% higher than it is today. You know, that tells you about the value destruction that there is no single company in all of Britain that over the past 2 years has seen its board present to investors and recommend that investors sell the company or sell the asset of a company at a discount to book value. It's like a new low being achieved by the board of this company.
James, we will certainly reach out to First Group to get the response of the board there around the decisions they have made, and we will present whatever they reply with. James, thanks very much for bringing us your perspective. James Raste, CIO of Coast Capital. Coming up on the programme, we switch our focus to geopolitics. Joe Biden calls Israeli Prime Minister Benjamin Netanyahu to tell him he publicly supports a ceasefire in Gaza amid mounting pressure on the US president to shift his stance. The latest next. This is Bloomberg.
traffic.
Okay.
During the pandemic, no traffic.
Okay. Where do you see the oil market in about 20 years or so?
Non-existent.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open. Half an hour into our European trading day. European equity markets on the front foot, up by around 0.75%. Let's dive into the sector picture, and it's an interesting one because all sectors, apart from one, are in positive territory. So generally speaking, the picture is one of growth expectation, growth hopes outweighing concerns around the virus today, in today's session, and putting aside inflation concerns perhaps as well. Some of the mining stocks getting a boost. We saw this through Asia. Mark Cudmore last hour was talking to us about the political developments in Chile, which could have an interesting impact. But basic resource stocks up by 1.4%. Energy stocks are higher. $70 is the price of Brent right now. 70.18 is the Brent price. And so as a result, we see oil majors moving to the upside. To the downside, there is one sector in negative territory, weighed down by Vodafone. That is telecom. It does seem that the capital expenditure plans at Vodafone giving some in the market cause for concern. That's the view of Goldman Sachs, at least. And we see that sector being weighed down by that heavy weight. Let's switch focus now to geopolitics. President Joe Biden has shifted the U.S. approach to the conflict between Israel and Hamas in Gaza, telling Israeli Prime Minister Benjamin Netanyahu in a phone call on Monday that the U.S. now supports an immediate ceasefire. For more, we are joined now by Bloomberg's international executive editor, Ros Matheson. Ros, good to speak to you. So is the U.S. stance on Israel hardening? Is the U.S. stance changing here?
It certainly represents something of a shift in tone. Of course, the president telling the Israeli Prime Minister he'll now support a ceasefire after days of calling for calm but not publicly seeking an end to the conflict. It's still not calling for a ceasefire, urging a ceasefire or demanding a ceasefire, which of course is something that other nations have been doing and calling on the US to do. In fact, the Chinese Foreign Ministry just did the same a few minutes ago. But it does represent something of a shift in tone, particularly because it was said publicly in the aftermath of their phone call. The US, of course, has been very engaged behind the scenes in diplomatic efforts to diffuse the situation, but publicly at least they've been very careful in their remarks to date, saying things like Israel has the right to defend itself and its reactions do not seem to be an overreaction so far. The question is it enough of a signal to the Israeli Prime Minister that the window is closing for him in his campaign against Hamas, and that he now needs to think about winding down and agreeing to a ceasefire with Hamas? We may not quite be there as yet as a result.
And this situation complicated enough, Rosalind, but then we have developments around Lebanon as well. How worrying is it then for Israel that Lebanon is again firing projectiles?
Well, that's right. We had another volley of rockets fired from Lebanon toward Israel overnight. Those, of course, tend to go nowhere and don't do significant damage. But it's been a couple of rounds now over the past week toward Israel. And that's a reminder, if nothing else, that no one can afford for this conflict to draw in other players in the region, including, of course, Hezbollah, because that then pulls in Iran. And there is a broader framework at stake here in terms of that thaw between Israel and Gulf Arab nations, and also the thaw between the Saudi Arabia and the UAE, for example. And if this goes on and gets messier and draws in those players, then you get a setback of those efforts to open up trade and investment in the region, to open up travel. In the worst case scenario, the Abraham Accords collapse entirely. That's not really a scenario that seems plausible right now, of course, but the Lebanon rockets are a bit of a reminder of just how much is at stake here.
Ros, thanks very much. Thanks for the insights. Ros Matheson, Bloomberg's international executive editor. Thank you very much for joining us. It is 8:33 here in London, 9:33 in Paris or Berlin. Now, as many countries begin reopening their economies, returning to international travel is more of a possibility than ever. But from PCR tests to vaccine passports, flying is likely to look quite different than it did just a year and a half ago. Bloomberg's Manus Cranny sat down with the chairman of Emirates Airlines to get his thoughts on the coming summer season.
The timeline always it's left also to an external government. You know, I mean, they are the one who are really slow. To us, we'll be always there in no time to serve the market as we used to. You know, we have more than 150 aircraft on our 777 are all in service. We have some of our A380s also en route. We're trying to push more and more, but we want also to government that they will open with all the new protocol. And
getting back to pre-COVID demand levels, Michael O'Leary was with me this morning. He said, we're going to need a vaccine passport, and that's going to take over from the PCR. Do you see that happening, vaccine passports trumping the PCR?
You know, I think we are lucky if we talk about the UAE. At least we did vaccinate 12 million doses has been given, really, and that nearly more than our population. I would say 105%. That's very positive. And I think sending that message. Of course, we need some kind of protocol, whatever you will call it, it's a passport, it's whatever name it's given, that will make people happy to see it is less work that they have to do.
So you support vaccine passports or protocols?
Yes, I mean, whatever it's called, you know, I mean, should be a procedure easy between government that you can enter any country or leave that country.
The UK is probably one of your most important routes, and yet we were not included on the green list. Why was that?
You know, I think there was a bit of people who really pushed a lot because we were open, a lot of citizens and people who came during the New Year and enjoyed it here. And as you see here in Dubai, the restriction is there, keeping our distance, you know, if forcing it, everybody is wearing their mask, you know, doing what necessarily do. And also on the airline side, if you will see that we took every measure to ensure the safety of our passenger and also our staff on board and also on the ground when they touch on the points here in
Is the UK being transparent enough on how you move from red to amber to green?
I don't think so. You know, it's very difficult to understand what. If you see our number is really dropping down, the number in the UK has really dropped down. So I think we need to look at in a very thorough way to see what exactly happening. And I think we proved to the world also that the UAE today isn't the top 3 in terms of vaccine.
But has the UK told you what you need to deliver to them?
Of course, I mean, our official been in touch with the UK government. They always demonstrated and they showed every number that we have.
That was the Emirates chairman, Sheikh Ahmed bin Zayed Al Maktoum, who was speaking about the return, of course, of international travel, speaking to my colleague, Manus Cranny. Coming up on this programme, corporate panic buying, surging demand for materials is pushing global supply chains to breaking point. We'll discuss those supply chains under pressure next. This is Bloomberg.
we're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the European Market Open. Just coming up to, 41 minutes into our European trading session this Tuesday. We are higher across Europe, maybe off our highs just a little bit, keeping an eye on US futures, which had been gaining momentum over the last hour or so, and indeed are holding on to those gains. So NASDAQ futures up by 0.9%, a focus on growth as opposed to the virus this morning. Let's have a look at some of the things we are watching out for today. At 10 a.m. UK time, we will have first quarter GDP data and employment data, as well as the latest CPI for the euro area. Then at midday, US retail giant Walmart is expected to report its first quarter earnings, closely followed by Home Depot's first quarter earnings. Interesting to get the retailer's perspective on inflation at this point. A key topic of conversation, and one that will no doubt be picked up by Robert Kaplan at 3 p.m. UK time. Dallas Fed President Robert Kaplan takes part in a panel discussion moderated by Atlanta Fed's Raphael Bostic during his bank's annual financial markets conference. So no doubt that inflation theme will rear its head there. Now, a year ago, as the pandemic ravaged country after country, consumers were the ones panic buying. Today, it's companies desperately trying to stock up. Corporate hoarding is pushing supply chains to the brink of collapse, with shortages and price spikes nearing the highest levels in modern memory. Joining us now with more on the story is Bloomberg's Chief Asia Economics Correspondent, Enda Curran. And Enda, you've been doing a deep dive into this subject, supply chains and the extent of the disruption that we're seeing there, something we've talked about many times on this programme. So when you've looked at big picture at this, what is behind this huge supply crunch that we're seeing for corporates?
Well, indeed, Anna, it's like you say, manufacturers that we spoke to complain that their supply lines are basically being turned upside down, and behind it all is this massive global demand for consumer goods as economies get moving again, as they reopen from the COVID pandemic, and manufacturers are struggling to meet that demand, and that struggle is coming in two ways. They either can't get the kind of components and goods they need to make their equipment, or they're facing sky-high prices for it. And this is across the spectrum of input materials. So it's commodities like iron ore and copper, it's plastics, it's a shortage of semiconductors, and even on the logistics side of things, we know there are problems with shortages of shipping containers, and there have been adverse weather events. There was even the blockage of the Suez Canal. So when you take it all together, the companies that we speak to say the breadth of shortages and price spikes that they're seeing now is unparalleled to what I've seen compared to previous spikes of volatility in terms of the prices that they deal with. And it's putting pressure on them, of course, to pass along those prices to customers.
Yes, and therefore it has an impact on that macro conversation, the inflation debate that we return to often. I wonder how many companies are learning important lessons about the resilience of their supply chains. So many supply chains built around the just-in-time principle, and maybe that is changing. What does this mean then for companies in the world economy, Enda?
Well, this then is the big debate, Anna. So if you have all of this pressure coming to the factories in terms of the prices they're having to pay to buy the materials, the question then becomes, are they going to hike the prices for the goods they are making and end up charging their customers, which means higher prices in shopping malls all around the world. Now, economists will say to you, a lot of the pressures that are out there at the moment are very transitory. It's because of the base effect, it's because of the COVID-19 pandemic disruption, and the thinking is once all that smooths out and some of this red-hot demand cools off, then you'll see a lot of this come back to earth. But as I was saying to you earlier, Anna, I mean, we have spoken to a lot of manufacturers and we've been following this through the year, and they're not really seeing a circuit breaker. And let me give you one example on the shipping container shortages. I mean, before Chinese New Year, the discussion was once we get over the holiday period, that kind of blockage will smooth out and shipping container prices will come back down. But that didn't happen. And if anything, these kind of blockages have spread even more so across the whole range of input materials that they need. Like I mentioned earlier, all the commodities you can think of, cardboard, screws, batteries, whatever it is. So they're not very optimistic. And the thinking is that there's pressure on these factories to raise their prices. And at the very least, it does feed into the global inflation conversation.
Yeah, absolutely. Some of the price rises we've seen, and we talked about them with Maersk Shipping on a number of occasions, shipping product from Asia to California. Certainly those prices are very much in focus. Enda, thank you very much for joining us. Thanks to Bloomberg's Chief Asia Economics Correspondent, Enda Curran. Let's get a Bloomberg Business Flash for you now. Here's Laura Wright.
Thanks, Anna. Amazon is reportedly in talks to buy movie studio MGM. That's according to The Information and Variety. It would be the e-commerce giant's biggest push into entertainment yet. Variety says the deal could value the company behind the James Bond films at $9 billion. MGM and Amazon declined to comment on the reports. Half a dozen senior bankers at Credit Suisse have left the firm in recent weeks. They're the latest in a raft of defections following the implosion of Archegos Capital Management. The Swiss bank was the biggest loser from the collapse of the firm, writing down $4.7 billion. It slashed the money set aside for bonuses to limit the financial hit. Heineken is in talks to take over South African wine and spirits maker Distell Group. It would be the most significant transaction since 2018 for the world's second largest brewer. Distell has a market value of about $2.3 billion. South Africa is one of Heineken's best performing markets. That's the Bloomberg Business Flash. Anna.
Laura, thanks very much. Laura Wright here in London. Now, last night was the final deadline for hedge funds to file their 13Fs. It gives us a glimpse into the moves by major hedge funds during the first quarter of 2021. It was a hectic quarter marked by Reddit-fueled trading and the implosion of the family office, Archegos Capital. Let's get into some of the highlights with Danny Berger. Danny, any big themes then? Were any of these hedge funds trading around the same theme in the first quarter?
Yeah, well, I think there was this pretty big shift and pretty clear shift when it comes to how hedge funds decided to treat tech. I mean, tech had a not so great first quarter. Sure, the S&P 500 tech index ended higher, but it underperformed the overall index. So we get this idea that not only did hedge funds profit from that, but they were probably at least partially behind those declines. So when you look at the names that the sort of well-known household name hedge funds dumped, it was these sort of stay-at-home plays. So Coatue and Whale Rock, all three of these stocks saw their positions reduced by these hedge fund managers. Now, we don't know if this is about valuations, if it's the reopening trade, or maybe even the reflationary trade, but it is a clear thing that happened of stocks that were really popular at this time last year. Now, speaking of high valuations, there's this one criticism we've heard about Tesla from a pretty well-known hedge fund manager, and that's Michael Burry, of course, of Big Short fame. Now, he said before that he doesn't like Tesla valuations. He thinks they're too high. On Twitter in December, he talked about a short position. Well, we got what he did in the first quarter of this year, and so he shorted Tesla or put a bearish bet via puts against 800,000 Tesla shares. Now, because of the opacity of 13Fs, we don't know when he put it on, when he would have exercised these, how much money he made, but we can bet that he did make money considering the first quarter for Tesla was not a good one. It lost about a quarter of its value, Anna.
Okay, so that's what Michael Burry is up to. That's what the hedge fund community thinks about tech right now and how out of favor it is. How did hedge fund managers treat more cyclical parts of the market then, Danny? You talked about a number of the reasons they could have had for getting out of tech. What about the cyclicals?
Yeah, that was a little bit more uneven. So Warren Buffett, for example, the kind of bets that he built was a trade that you'd probably make around one if you think interest rates are going to stay low. So not exactly a cyclical bet. He also added some to a gold company, but he cut positions in these 3 banks. This is something he's been doing for a while. For example, he's been trying to exit Wells Fargo for some time now. So he leaves all of these 3, which of course, you know, their margins are going to be crimped, that net interest income if rates do stay low. But Warren Buffett did pile further into Bank of America. We know this is very retail consumer-oriented bank, so maybe these cyclicals he doesn't like. But when it comes to betting on the American economy, if he's doing that through Bank of America, that sort of fits in his theme of saying, you know, America's doing well, it's coming back, Anna.
Danny, thanks very much. Danny Berger with the insights you can glean from what hedge funds are up to, or what they were up to in the first quarter of this year. Coming up on this programme then, we'll be back to the macro. UK employment rises more than expected as the jobs outlook improves and the economy reopens. Where's next for the Bank of England's monetary policy? We'll get the view on that from the Market Live team. Laura Cooper joins us next. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. We are 53 minutes into our European trading session and things moving to the upside. We are perhaps off our highs of the session, but we are still substantially higher across the European equity markets, up by around 0.5%. Many of the sectors, most sectors in positive territory. Vodafone weighing on the telecom sector, though. Let's bring into the conversation Laura Cooper, Bloomberg's Markets Live macro strategist. Your thoughts, Laura, on what is pushing us higher here? Because in the Asian session, we went higher, despite ongoing concerns about clampdowns in certain economies and what activity can and can't be done because of the virus there. Yet the focus for global risk assets seems to be very much more on global growth.
Yeah, and that certainly does appear to be the case today. I think there's probably a number of factors. One, we are seeing the dollar on the back foot. That does tend to bode well overall for risk sentiment. And then I think investors are focused on European recovery. We are seeing Europe take that growth recovery baton from the U.S. That's being played out in terms of bond yields climbing to fresh year-to-date highs. So I do think investors are still focused on the fact that Europe is a cyclically exposed equity market, and we're going to continue to see them benefit from that broader global narrative.
What stood out for you in terms of the data we got on the UK jobs market a little bit earlier on today, Laura? You make the point this morning that the impact of it might not last long in markets because we have inflation data for the UK due tomorrow. But in the short term, we do see a stronger pound. Of course, that's much to do with the weaker dollar story, but we do see a stronger pound. What stood out to you as being a positive then from this data set?
Well, I think the fact that we did have UK employment rising in positive territory for the first time in a year is certainly encouraging. But I think actually focus should be more on more of those timely indicators around the furlough schemes. Because really crucially for the UK, it matters how quickly employers are able to bring back on those workers. So we saw the UK unemployment rate come in about 4.8%, and the BOE expects it to climb to about 5.4% this year. But the more workers are off that scheme before it unwinds, that's going to bode well for that recovery outlook. But certainly, I think focus for investors will be more on that print tomorrow around inflation. We are expecting to see a spike like we did in the U.S. around base effects. And so I really think it's Bank of England's response to that number and whether they continue to see it as transitory that markets will be watching.
Just thinking about commodity prices, and we've been on a wild ride recently. We're not all that far from all-time highs on the Bloomberg Commodity Index. A sell-off last week, but something of a rebound this week. Iron ore back up another 3% in today's session. I know you've been asking Laura on the Markets Live blog which of the assets that will be hit if the commodity rally ends, even if that's not what it looks like right now. What kind of thinking are you getting there on commodities?
Well, certainly, I think, the fact that we have seen commodities rally so strongly over the past year is really spurring a breakout across a number of assets. So material stocks in the U.S. relative to tech are now seeing a breakout. The FTSE 100 is underperforming its European peers. That should continue to benefit. Commodity currencies like the Canadian dollar is up about 5% this quarter alone. So yes, if we do see those gains begin to slow, that will weigh on some of those key inflation type hedges. But I think for now, like you mentioned, supply constraints, demand, this global recovery, I think it's too soon to declare the death of the commodity rally.
And certainly, Laura, we saw Brent prices going higher, didn't we? Now over $70 a barrel. Maybe that psychological level matters, if that's still a thing. Laura, thanks very much. Laura Cooper, Bloomberg Markets Live, macro strategist. Thanks very much for joining us on the programme. That is it for the European Market Open. Surveillance Early Edition is up next. They'll keep tracking these markets for you as they head higher, and the sun shines, I think, over London. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
It's such an interesting new world.
The world is changing. For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
The importance of computing in all products is just going up and up and up.
I think Bitcoin will be somewhere between 40 and 55,000 for the next chapter.
We're going to be spending a lot more than Netflix. Right now, it's between the two of us, we're spending $20 billion a year on content.
We reopened this year. That may also put, and indeed in the CPI report, it did clearly put upward pressure on prices. Most of this is likely to be transitory.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, and here's what's coming up on today's program. Mike Novogratz tells Bloomberg that Bitcoin will be pressured for weeks amid Musk's induced mayhem. This as Michael Burry makes his latest big bet, this time against Tesla. Stocks are positive, but investors keep an eye on the virus. Japan's economy stalls. This year's WEF meeting is off, and the UK battles the India variant. And the race for content, Amazon is reportedly in talks to buy film studio MGM, home of the James Bond franchise. It'd be the biggest push into entertainment yet. Well, good morning, everyone. Last night, of course, was the final deadline for hedge funds to file their 13Fs. It gives us a glimpse into the moves by major hedge funds during the first quarter of 2021. A hectic quarter marked by Reddit-fueled trading and the implosion of the family office Archegos Capital. Let's get straight to the highlights now with our Danny Berger. Hi, Danny. Any really big themes that most funds seem to be playing on last quarter?
Yeah, Francine, we definitely saw a pretty sizable shift in attitudes when it comes to tech and sort of the stay-at-home play. Now, it didn't really do as well as the broader benchmark in the first quarter of 2021. So this is something that hedge funds not only would have profited on, but probably contributed to it. So two household hedge fund names, we had Coatue and Whale Rock, both reduced their holdings in these three stocks. So I have to say, Peloton, CrowdStrike, Zoom, these are ones that you really think of in that stay-at-home play. Now, we don't know if it's because this is a reopening trade, this is a reflationary trade, or it's concerns about valuations, but they did make the bet. Now, speaking of valuations, one of the bets that's sort of gotten a lot of traction, a lot of interest, is this one of Michael Burry from Big Short fame. Now, he's been outspoken about his dislike for Tesla before, calling the valuations preposterous. In December, he deleted a tweet, but at one point was saying that he was short Tesla. Well, in the 13F filings, we learned of a lot of puts he put on the company Tesla. So, of course, these are bearish options on about 800,000 Tesla shares. Now, because of the opacity, we don't know when he put it, how much money he would have made from it, but it stands to reason that he probably would have made money considering Tesla lost about a quarter of its value in the first 3 months of the year, Francine.
So, Danny, if tech is one side of the trade, how did hedge fund managers actually treat more cyclical parts of the market?
So this one was a bit more mixed, and I specifically for this, Francine, want to concentrate on Warren Buffett because he's kind of an interesting take for sort of the zeitgeist of the market. Now, he continued to trim his bank holdings, specifically Goldman, JPM, and Wells. This is something he's been doing for a while. So this kind of is within that theme of preparing for lower interest rates for longer, more easy monetary policy. I mean, we did even just hear from Clarida yesterday saying that they should not yet pare back bond buying, but he did buy more Bank of America shares. He's really been building a big position around that. So that would seem to suggest that Warren Buffett is still betting on sort of the American consumer, that sort of retail story of that section of the economy coming back, Francine.
Danny, thank you so much. Our Danny Berger there with the very latest on these filings. Now, the race for content is on just a day after Bloomberg broke the news about the biggest media merger in years, AT&T's media assets and Discovery. Now there are reports that Amazon is making its biggest push into entertainment so far. Reportedly, the world's largest online retailer is in talks to buy the famed MGM studio, the company behind the James Bond series. According to Variety, Amazon could pay about $9 billion. MGM would help bolster Amazon's Prime streaming services. Well, joining us now for more on this is Matt Bloxham, who covers media for Bloomberg Intelligence. Matt, great to have you on the program as always, and good morning to you. How will a possible MGM acquisition help Amazon's streaming service?
Yeah, hi, Francine. I mean, I think obviously, you know, with the streaming rivalry heating up, you need to keep your content fresh. You need to keep having new content come through, which is going to keep your existing customers, bring new ones in. And so I think, you know, adding MGM to the stable will definitely give them a stream of, you know, not just kind of back catalogue of well-known films, but new content coming both on the film and the TV side. And obviously, one of the big standouts is potentially the kind of long-delayed James Bond film, which is due to come out cinematic release in October. Maybe they'll shift that if they do this deal and put it onto the streaming platform. But you know, it beefs up the content as everybody else around them is you know, continuing to spend billions of dollars on content and merging.
So, Matt, should Netflix and Disney actually be worried about this Warner Media Discovery tie-up?
I mean, I think they probably won't be worried, but they'll definitely be respectful of it. I mean, I think one of the big differences for me is that, you know, Netflix has a very, very clear brand, certainly outside of the US, you know, well known, similar with Disney. What you've got with Time Warner, or Warner Media and Discovery is, you know, two or three, you know, fairly well-known brands, but perhaps not quite got the clarity outside of the US, and international expansion is going to be key for them. So I think probably one of the biggest challenges for that new business is to kind of create a clear anchor brand outside of the US that's going to really kind of rival the clarity that Netflix and Disney have with customers.
Matt, we also heard about this TF1 M6 deal at the start. I mean, could it be the start of TV mergers in Europe?
Yeah, I think it is, and we're seeing that in a couple of different ways. And also, this is an in-country deal, and I think there were some question marks today about, you know, how easier passage that's going to get through antitrust because of the dominant position that will have in audience share and TV advertising. But we've already seen that Mediaset, the Italian broadcaster, is planning a few moves to facilitate some cross-border M&A going forward. So I think, you know, given what we're seeing in the broader streaming landscape, the pressure on advertising-funded TV businesses, the need to invest in streaming technology, to invest in content, all of these European broadcasters are too small on their own, and I think we are going to see over a number of years a series of deals to create perhaps, you know, two or three much stronger groups, both from a technology and a financial perspective. So yeah, watch this space in Europe. I think there's going to be a lot of deals that happen.
Matt, thank you so much. Matt Bloxham there from Bloomberg Intelligence, watching the media space. Now, coming up, Smart Conversations on Bloomberg Surveillance Early Edition. We'll talk appetite for M&A, inflation, commodities, and cryptos with John Normand, head of cross-asset fundamental strategy at JP Morgan. Now, if you want to take part in the conversation, just IB us. You can IB plus TV Go or IB me directly. This is Bloomberg.
you ever thought of bottling your happiness? And you know, you could make a lot of money if you bottled your happiness.
Yeah, you know what it is? It's just gratefulness. I should have died in that field in Iraq.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. President Joe Biden has told Prime Minister Benjamin Netanyahu that he would support a ceasefire between Israel and Hamas. It is a shift in the U.S. approach following days of rising criticism for not taking a stronger stance. It adds to pressure to end the violence that has so far killed at least 220 people, mostly Palestinians living in the Gaza Strip. Meanwhile, President Biden says the U.S. will share at least 20 million doses of authorized COVID-19 vaccines with foreign nations by the end of June. It'll be the first time the White House will release doses abroad that could have been used domestically. It's on top of the 60 million doses of the AstraZeneca vaccine that hasn't been approved for use over in the U.S. After devastating India's biggest cities, coronavirus is now hitting rural parts of the country, and many of the villages have no way to fight the virus. Some have no healthcare facilities, no doctors, and no oxygen. Some rural citizens say they feel they have been left behind by the government to fight the pandemic alone. Many believe the scale of the crisis is much bigger than the official numbers do suggest. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. Now let's get back to one of our top stories, and it's been a week for M&A, a big week, and it's only Tuesday. AT&T and Discovery are set to merge media assets. Amazon is reportedly looking at taking over iconic film studio MGM, and in France, Bouygues and RTL are in talks to merge broadcasters TF1 and M6. Now let's talk the landscape for M&A in these markets and what comes next. Joining us is John Norman, JP Morgan Head of Cross-Asset Fundamental Strategy. John, I don't know whether, good morning, first of all, I don't know whether this is symptomatic of media deals because there's a fight for content, which is now kind of coming to the forefront, or whether in general we're going to see consolidation because funding is cheap and that will sway markets.
Well, I think it's both, and I think it's much broader than media, meaning there's always a strategic interest by companies in pursuing certain deals, whether it's for access to other markets or newer technology or to pursue consolidation in an industry. But certainly you couldn't pick a more robust macro environment for executing these transactions, basically because the funding costs are very low and equity prices are pretty close to all-time highs. So every part of the M&A sort of backdrop is working, whether it's the strategic side of things or the macro side of things.
John, I know we'll talk about inflation in a second and bond yields, but as we could get closer to about inflation, that could maybe mean that markets realize that there will be some kind of normalization of central bank, certainly the punch bowl. Does it spur M&A even more, or is it just part of the cycle?
Well, I think there's always some discussion that maybe companies are pursuing deals preemptively ahead of some sort of anticipation of tighter funding conditions to come. But I think we're so early in the business cycle, so early in the earnings cycle, so early in the Fed cycle that I don't believe anything that happens over the very near term is really going to be a huge derailer to what's happening in terms of corporate activity. If we were at a higher starting level of funding rates, if the Fed were on the cusp of moving from neutral policy to restricted policy, if we were close to a big rollover in earnings growth where it went from above trend to below trend, then I think you could say the macro forces would be turning against the M&A dynamics. But I just, in general, feel like we're quite early cycle in terms of most things that affect corporates.
John, overall, why is it so difficult to forecast the path of the U.S. economy right now?
Well, I think it's much more difficult to forecast the path of inflation as opposed to the path of growth. I think we're pretty confident that there's so much stimulus and so much pent-up demand in the U.S. that it would be easy to get above trend growth for a couple of years. We may be off on exactly the quantum of growth, the magnitude or the pace of the increase, but I think it's pretty safe to say it's going to be above trend for a while. The inflation story, I think, is much more difficult because we are dealing with an unprecedented situation. That's a reopening effect in the context of some supply bottlenecks. And even though everyone's been correct that these shortages would appear, and everyone's been correct that there have been unusually large price increases, no one's been correct on magnitude. I'm not too worried about that because I feel like when you look at these sectoral supply constraints on a case-by-case basis, there's a good reason to believe that many of these are going to be alleviated in the next 6 months. But as far as what the right forecast should be point-wise for the next 6 months, I think this is much more uncertain.
Well, I mean, I know you've had some, I guess, some new cross-asset strategy kind of, trades that you want to put on. Is there anything that's changed in the last 2-3 months, John, on how you look at the markets or some of these new trades?
Well, I think the main thing that's changed is just levels, and that may sound like a very glib comment, but the point is that if you're trying to hedge inflation and you realize that in break-evens are close to decade highs in tips, if you recognize that a lot of commodity prices have gone up, you may not want to favor some of the same trades to hedge inflation that you did a few months ago. So at current levels, given how much markets have already moved in the first 5 months of the year, I still feel like the best inflation hedge is a sector within commodities, i.e. oil, as opposed to the very elevated prices that you already see in base metals and in agricultural commodities. I don't think there's a whole lot of value in tips given how much the break-evens have rallied over the past several months. By contrast, I do think there is some value in some of the emerging market commodity currencies because not only have they failed to respond fully to the move up in commodity prices, but the carry on these has increased because of central bank tightening over the past few months. So you can make some minor rotations within the basket, but frankly, I think the whole of the basket of real assets is still going to keep climbing this year.
Yeah, and actually I want to get back to commodities in a second and maybe tie it in with China, and we'll talk about whether crypto is a good hedge against inflation, if it is at all, John. But what's your take on Europe right now? Is there any value in equities because, the vaccination process meant that maybe some of these markets were maybe sold off more than expected?
Yes, I think there's a minor catch-up trade in Europe. I wouldn't call it a major one because the equities have pretty much kept pace with U.S. equities over the past 5 months, and the euro has rallied as real rates have come off in the U.S. So I don't think there's a massive opportunity, but for choice, I'd rather be overweight Europe versus the U.S. In an equity sense, thinking that the reopening is going to deliver as big a growth boom and maybe as big an earnings boom in this part of the world as you're seeing in the U.S., even though the U.S. is the economy which is pouring more fiscal stimulus on domestic industry. So that's probably something that could persist for maybe the balance of the year. I'm not sure I'd stretch it into 2022 simply because the U.S. is going to have additional fiscal stimulus coming online progressively next year, whereas Europe probably will not. But for the next 6 months, yes, I'd rather be overweight Europe versus the U.S.
John, thank you so much. John Norman there of JP Morgan stays with us. We'll talk a lot more about commodities and the commodities rally picking up pace again. Copper rising on fears that supply from Chile could get tighter. We'll discuss all of that next. And this is Bloomberg.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Expect clear, concise conversation on Bloomberg Surveillance.
There's no vowels in a digital future.
Come on, John, I just think it works.
It works for inverters.
We've beaten this to death.
Watch weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the global commodities rally continues as surging demand for materials pushes supply chains to the brink. Copper rises towards a record following news that miners in Chile face tighter regulations. Now, Brent crude has hit $70 a barrel for the first time since March. We're back with John Norman of JP Morgan. He's still with us. John, we were talking, thank you for staying with us. We were talking a little bit about commodities before, but is there anything in the markets overall that you think is in bubble territory or that will warrant a correction in the next couple of months?
I don't think any asset classes are in bubble territory, meaning if you look at broad equity indices, if you look at credit indices, none of those to me are experiencing this combination of extremely high valuations and extraordinary momentum and very large investor leverage. When you look at the sub-asset class level, if you look at particular themes within equities, if you look at some single name stocks, if you look at newer asset classes like crypto, I think you can tick a few more of those boxes. And I believe that's why, as you've seen rates rise even minimally over the past month, you've seen these higher valued names and newer asset classes deflate somewhat. Importantly, though, if you're thinking, will there be a systemic consequence to the deflation of some of those smaller, expensive markets? I don't think so. I think the systemic consequence would come only if you believed that the overall equity markets were in a bubble or the overall credit markets were in a bubble, and I don't think that's the case. So there's still ongoing vulnerability as rates rise this summer. I think that rate rise is going to come because the Fed is going to change its messaging around tapering. This is going to put more pressure on the expensive parts of the equity market and some single name stocks as well as crypto, but I don't think this is going to pull down the overall broad markets very much.
What will crypto actually become? I don't know whether it's Bitcoin or something else, but will we see something emerge that's greener and more widely used, or does it always stay in this space where we don't exactly know, where it goes really from day to day?
Well, I think because the starting point is that there's a lot of interest in private digital money, there will be an ongoing attempt to come up with a better form of it over the next few years. And Bitcoin was sort of the forerunner. Its sort of lack of ESG compliance has been revealed and is becoming increasingly appreciated, but there are other crypto assets which don't have that. I do think there's a much more fundamental question here is what's kind of the intrinsic value of private money. For me, money has always been around the utility of a medium of exchange, which is universally accepted within a certain economic region. And because none of these cryptocurrencies will ever be legal tender, I think the use case is somewhat suspect. So I understand why there's a constant sort of attempt to find a better form of money, but I really feel like this lack of legal tender status is always going to limit the utility, and it always questions what the use case is over the long term.
John, we have a couple of questions actually from viewers for you, and thank you for everyone sending them in. Please continue sending all the questions for our great guests. So this person writes in, John, and says, everybody knows there's a huge stimulus in the U.S. and growth should be above trend for the next 2 years. So should this not already be reflected in the level that the S&P has today?
I think the growth story for the next 18 months is already in the price, meaning if you think about where earnings expectations are for 2022 and you apply a multiple like 20, that kind of gets you to the level that the S&P is at right now. So from that perspective, yes, it's in the price. But remember, the business cycle is not stopping in 2022. It's going to go beyond that. And I don't think it's entirely unreasonable for markets to price in something reflecting several years of strong earnings growth rather than just the next 18 months. So the person who was posing that question is 100% correct. I'd say the near-term story definitely in the price, but because the cycle is going to go on for quite a while, this is generally what sustains these high valuations.
John, very quickly, is there something that would propel it higher?
Well, I think just the persistence of above trend growth, because we simply observed that the longer growth stays above trend, the more, and policy rates stay below average, the more asset price inflation tends to be created. And maybe that is just a foolish extrapolation bias that investors and analysts have, but it's nonetheless a pretty consistent sort of feature of financial markets. So I think as long as we're in this sort of regime where policy is accommodative, where growth is above trend, you're going to see drift. You may not see, or you will not see as much drift going forward as you've seen over the past year, simply because the starting level of PEs is higher, the starting level of spreads is a lot lower. But I think higher is the path.
John, thank you so much. John Norman, as always, Smart Conversations. He is JP Morgan Head of Cross-Asset Fundamental Strategy. Coming up next, we continue looking at the economy and vaccines. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
Well, Mike Novogratz tells Bloomberg Bitcoin will be pressured for weeks amid Musk's induced mayhem. This as Michael Burry makes his latest big bet, this time against Tesla. Now, stocks are positive, but investors keeping an eye on the virus. Japan's economy stalls. This year's WEF meeting is off, and the UK battles the India variant. And the race for content, Amazon is reportedly in talks to buy film studio MGM, home of the James Bond franchise. It'd be its biggest push into entertainment yet. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. As you mentioned, Amazon is reportedly in talks to buy movie studio Metro-Goldwyn-Mayer. That is according to the Information and Variety. It would be the e-commerce giant's biggest push into entertainment yet. Variety says the deal could value the company behind the James Bond films at $9 billion. MGM and Amazon declined to comment on these reports. Now, half a dozen senior bankers at Credit Suisse have left the firm in recent weeks. They are the latest in a raft of defections following the implosion of Archegos Capital Management. The Swiss bank was the biggest loser from the collapse of the firm, writing down $4.7 billion. It has slashed the money set aside for bonuses to limit the financial hit. Heineken is in talks to take over South African wine and spirits maker Distell Group. It would be the most significant transaction since 2018 for the world's second largest brewer. Distell has a market value of about $2.3 billion. South Africa is one of Heineken's biggest performing markets. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, it was meant to be the world's safe haven, but WEF organizers are canceling their plans for a summit in Singapore after a recent uptick in cases. The spike comes at the same time as Taiwan is seeing rising infections and India's COVID crisis is heading deeper into rural heartlands. Now, as Western economies look to reopen, the outbreaks in Asia highlights the disparity in vaccination levels. Well, joining us now is Louis Costa. He's Citigroup Managing Director and Head of CEMEA FX Strategy. Louis, really with the best title in town. Thank you so much for joining us. When you look at some of the vaccination levels in some of the emerging markets and the resurgence, of course, of variants, I mean, the horrific situation in India, some of the concern in Brazil, what does it actually mean for what kind of recovery we'll see from the countries hit most by COVID?
This is a huge warning sign for investors, seeing that there's still a huge divergence between vaccination rollout and the possibility to raise mobility curves, right, as these economies come out of restrictions in developing markets if compared to emerging markets. And you mentioned Singapore, you mentioned Taiwan. These were economies that, you know, up until a month or 2 months ago, we were all believing that they were, you know, absolutely fine, that they won the battle. And we know that, I mean, only some of these economies, they are actually, you know, going through a few spikes, regional spikes, localized spikes, we have to say, but they are going through spikes. These are economies that actually, you know, did reasonably well in terms of vaccination rollouts. And the question mark is, you know, what does it happen actually to, you know, some of the economies that are really lagging, which is the case of South Africa. It's definitely the case of Brazil. India is another example. So I think this divergence will be one possible factor here, detrimental for the growth outlook in emerging markets.
So, Louis, where do you see the same value? How difficult, first of all, is it to know how these new variants will perform? And, of course, you know, a lot of these countries we thought were out of the woods, or certainly India we thought had gone through a first wave, a second wave, and would be looking a lot better than it is now.
Well, I mean, that's the difficulty, you know, in measuring how impactful the new variants will be, and we know that governments are trying to answer this question more accurately now. When we do believe that, I mean, with the general feedback we had, we do believe that, you know, the vaccination rollouts are still very important responses to it. So it's going to be very important to see, you know, an acceleration of these rollouts in the major EM jurisdictions. And before that, if you accelerate the mobility curves, especially cross-border mobility, that can be detrimental. That will pretty much hit back in terms of, you know, new waves, and which is exactly what we saw. Right, and ultimately, you know, it will not allow the governments to release restrictions as fast as, you know, many economists or many investors believe. So ultimately, what we want to see the ultimate focus on the vaccination rollout going forward.
Louis, what does it mean? So what are you expecting from the Fed? Will the Fed be patient, and will PBOC be patient? And if that's the case, what does it mean for some of the countries that you cover?
The Fed will be patient. I find amazing that some investors they seem to be so focused on the whole topic of taper. It's way too early, and the Fed has been extremely consistent on the way it communicates with the market. I mean, talking about patience, talking about a gap in the job markets, and generally speaking, this is very good. This is very positive for the EM assets. We know that. I mean, that tends to drive volatility of financial assets down, and that's exactly what the high yielding EM wants. So we believe that, I mean, the second half of the year, once we go through this peak of inflation, will be probably a lot more positive for the EM assets in general, especially on the fixed income side.
So how do you actually play some of the countries that you like the most? So if there's, so what your top trade right now, Luis, what would it be? And do you go through, is it definitely FX, or is there another way of playing it?
It's a balance, actually. It's a balance. I mean, we do like the South Africa rand quite a lot on the FX side. In terms of trade exposure, commodities, metal and mining, commodities trading really well. This is all, in a way, filtering through the South African rand. So we do like, short dollar versus the rand, or rand on RV, relative value trades, using the rand as a long leg of the trade. We also like to receive rates in South Africa to go long bonds in South Africa, and there's divergence now. So we do like to pay rates in some low yielding economies, or so low yielding curves. Because why? Because they still trade relatively in sync with the rising and the steepening that is taking place now in the core. So, for example, Czech Republic, this is another economy that we would like to have payers and steepeners. And on the creditor side, I mean, it's about growth rebound. It's going to be tentative. For example, we do like Ukraine warrants, and we do like Ukraine Eurobonds, which is, these are bonds, or these are instruments that they do trade very well with the potential outlook of growth rebound in the region. So we try basically to kind of be a balance between growth, equities, and FX, generally speaking, at this moment.
Thank you so much, Luis Costa there. Great to speak to you again. Citigroup Managing Director and Head of CE MEA FX Strategy. Now, alongside vaccination, flexibility has been a buzzword during the pandemic, especially when it applies to work. Employees are demanding more bespoke working arrangements even as they begin returning to the office. Workspace sharing company WeWork says demand is up and it is ready to capitalize on the shifting world of work.
Companies are not looking forward to going back to the traditional way of signing a 20-year lease and setting up these non-flexible headquarters. That's dead. The office is very different today. The biggest, or most of our larger customers are the world's most valuable companies, who basically are sending us their employees because they don't know, how many days they're going to be working, because they don't know where their business is going to grow. And when you're sitting in the only company in the world that has over 1,000 buildings in pretty much most important cities around the world, the demand for WeWork space today is higher than it was prior to the pandemic. So what the pandemic allowed WeWork allowed to reinvent itself, it allowed to learn how to operate on a most cost-flexible basis. And now you have a WeWork that, like I said before, WeWork should be a profitable company by the end of this year, or by the beginning of next year as latest. And demand for this type of flexible office space is higher than ever. And I think the world is going to redefine in terms of where flexibility becomes the most important part that a company can offer its employees.
I got to go there with the crypto question. Obviously, WeWork last month announced that it would be accepting payment in the form of cryptocurrencies, notably Bitcoin. It also said it would hold some on its balance sheet. Today, we saw Elon Musk come out and say Tesla would no longer be taking Bitcoin over concerns about the impact it has on the environment. Obviously, the environmental impact of mining Bitcoin has gone up significantly over the past few months. Is that the right move? Is that something we're likely to see WeWork follow, or is that just a sort of a reaction to a short-term trend?
No, the reason why we decided to accept cryptocurrencies was because our customers were asking for it. One of the things that we do with Sandeep is we listen to our customers a lot, and we have to, right? They tell us the type of office they're looking, they tell us the type of setups that they want, and the crypto word came out a lot where employees say, we would like to pay you in crypto. We have accumulated a significant amount of wealth in crypto that we would like to use it to pay for rent, as rent becomes an important part of many companies. So we decided to basically accept crypto. And at the same time, as people pay us in crypto, to us, it's just another currency. It's like we have US dollars, we got euros, we got pounds, we got crypto, we got Japanese yens, we got, so to us, it makes no difference. And when our customers ask for reimbursement in crypto, we pay in crypto. And we have, we've had some of our customers who are paying us in cryptocurrencies. And we have some landlords who said, look, I would like you to pay me in cryptocurrencies. So, the way WeWork looks at it is, we're going to listen to what our customers want from us. And if they demanded that they wanted to pay in crypto, that's why we took crypto as a form of payment.
Do you have a level that you'd be comfortable going to in terms of your sort of total money going in and out in the form of crypto?
I mean, today is a very small part of our business. I think it's the beginning. I think crypto is a mega trend. I think crypto cannot be ignored. And, it's going to grow according to whatever our customers want. If our customers want to pay in crypto more, we're going to accept crypto. If our customers want to pay on traditional currency, we're going to accept form of payment as traditional currency. So to us, this was nothing more than a move to basically help our customers satisfy some of their needs that our customers were asking from. Obviously, our first customer and the large one was Coinbase. Not a lot of people know, but the headquarters of most of the real estate that Coinbase uses is WeWork, and being them the largest exchange of cryptocurrency, they were the first customer to pay us in cryptocurrency.
Well, that was Marcelo Claure, the WeWork chairman and SoftBank COO, talking to Bloomberg's Ed Hammond on the improving outlook for demand and cryptocurrency. Now, coming up, the crypto coasters take another plunge as Tesla founder Elon Musk stays skeptical on Bitcoin. We'll have the latest next. This is Bloomberg.
لا تفرق جمعنا هذا إلا بذنب مغفور وسعي مشكور وعمل متقبل مبرور يا عزيز يا غفور اللهم اغفر بلادنا وبلاد المسلمين من كل سوء ومكروه اللهم اصلح حالنا.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Can you take a picture?
I think Bitcoin will be somewhere between 40 and 55,000 for the next chapter before it kind of builds up enough new momentum to take out that 55,000 and end the year much higher.
How concerned are you about the short-term volatility being introduced by Elon Musk?
Listen, Elon Musk is an important figure in American business, and certainly in the global retail crypto world, he's a bit of an icon. He was great for crypto when he was positive for it's in crypto, it's in tech, it's in industrial businesses.
Is it problematic that like one of the hottest currencies is a joke, Doge,
and that Elon Musk, who is this sort of face of it all, is essentially whipping people into that one and sort of multiplying the jokes. And you have other influential people talking about even other jokes. And that this sort of does it make it harder to put on a, basically make the case that there's a serious industry with a straight face?
Well, listen, yes is the answer. I don't want to discredit the Doge community or any of these communities, right? What you're seeing here is a response against the monetary policy of the U.S. and the world and the frustration people have had with the system. And this young generation has said, hey, we can band together and create our own way of investing. Some of it is frivolous and I think will end in tears. And so we try to steer our clients away from projects that we don't think have long-term sustainability. But it proves something that communities can band together. Right? The world has gotten very tribal, and that's not necessarily a good thing. And if you go on crypto Twitter, you really realize just how tribal it's gotten. One of my buddies made some negative Doge comments, and he got 6 death threats. And so that's not good. But I do think let's not miss the forest through the trees. Underneath it all, there's a huge revolution going on run by serious people who are trying to rebuild the financial market infrastructure of this place.
Well, that was the Galaxy Digital Chief Executive Mike Novogratz wearing a suit, speaking to Bloomberg's Sonali Bazek and Joe Weisenthal, taking the long view on the future of digital currencies. Now, staying in the crypto space, Bitcoin continuing a pretty volatile week. That's probably the understatement of the year, losing about a quarter of its value in the past 7 days. Now, the token's collapse comes after Tesla chief executive Elon Musk blasted investors with a series of tweets questioning the environmental impact of Bitcoin mining. Well, joining us to talk about crypto is Joanna Ossinger, Bloomberg's Asia Crypto Tsar. Good morning, Joanna. Also, you also had the best title. We only get people with really good titles on this program. First of all, Joanna, what's the reaction in the crypto community to Musk's statements about Bitcoin?
It's